Okay. Then my okay. Now my screen, you can all see my screen now. Let's start with I think I have to move some fun there so we can do something. Let's start with this coin. Let's assume there's a trade in the group now. Maybe Mr. Abraham drops a particular trade and say, okay, enter this trade at a particular given time. Okay, put your entry point, put your stop loss, put your take profit. I want us to address this now. Please watch carefully. It is very, very important. Now you're given a trade now to enter this coin. Liver, this is liver against USDT. That's the pair. Now it depends on you. If you want to use cross, you can use cross. If you want to use isolated, you can use isolated. I will talk about all these things when I want to go into. For the beginners, I will explain this. I just want to show us how to enter a trade, okay, based on the signal, okay, that you have in the group. Now they will tell, okay, maybe the signal will tell, okay, enter liver at 0.08. This from my screen, I'm seeing 0. Enter the signal this particular coin at 0.018 down to 0.01 okay 0.0188. Then that means between 18 and 188, that is your entry point. Anything after or below 18 and 188, if you are entering at either your own risk, okay, or a better entry point. Now it could be that we say short this coin now, that is sell. We are saying short now, we're talking about sell. You click on the sell option here. Now, once I click on sell, I want to short the coin. Now, this is the current market of the coin, what I'm touching here. Okay, and this is your entry point. Maybe your entry is within this zone. If the market is higher than this and you want to short, it's for your own good. You have more advantage to those that entered earlier. But if it's below the entry point, if the market is below the entry point, and you need to adjust it manually yourself now, okay? Because your stop loss will now be closer to the market. That is the mistake most of us are having. I will explain that, okay? For the new beginners, I will still explain how to read the stop loss. Now you enter your entry point somewhere here. You enter based on the price given in the signal. You enter the price here. Then now, I notice most of us will come to this place and select this place to add our take profit and our stop loss. It's not actually bad to do that, okay? But if you're adding your stop loss and take profit here, you might not get some informations, because now adding it here, you won't know the amount your expected earning, your expected profit and loss, or your expected, you won't get it. You can only put it based on what you have there. But I myself, personally, if I want to play stop loss, I don't put it like this. I first of all enter the trade before manually entered, and before I will manually enter my stop loss and take loss. So I will know my estimated profits also, and also my estimated losses. I will know if my stop loss is either closer to the entry points, so I adjust it manually or not. Let's take it now.
I don't know, sorry to interrupt you. So okay. I wanted us to make a reference maybe with a live trade, so that I don't know which trade it is. Was it the one that was posted this morning or yesterday, so that I can repost into the group?
We can the liver is still active. It's still a good token. Okay, it's still active. You can see enter active. You can let me check the liver signal. Let's just call the entry point for the liver. Okay, call the entry point for us, so we can enter the liver now. If you're on WhatsApp, please just help us call the entry point.
Okay, so the entry point for as at this morning, the one that I just again the group. If you are on our group, I'm sure you'll be seeing this now. So it is 0.00755 to 0.00782. That's the range.
And now it's high. Now it's higher now. The market is higher than that entry point we give. Yes. I see it now. So let's use this higher entry point because it's for we'll make more profit because it's high. So we are using this entry point. Let's assume we are using the entry point you give us now. Now, what's the stop loss and take profit there?
The stop loss for that trade currently is stop loss is 0.00785.
Now the stop loss is 0.00785. Now, if you look at the stop loss, now the stop loss here, it's even lower than the entry point. That means we are supposed to use a higher stop loss now, because this corner, this signal want to enter now. This another good entry point, another advantage for you. Now, if you miss that 0.007, this is a very good entry point. So I'm not going to use this same stop loss now. I'm going to make sure my stop loss is above the current market price or my entry price. I see it now. It's going to be above the entry price. So I'm going to use 0.00. I'll use 1.8. as my stop loss, for example. I see now that means if the market now pushes up, rises up to 0.0185, that means I'm going to lose some fraction, which I cannot see right now because I don't know my estimated losses now, because I'm just entering this in blindly. I see it now. Then if my take profit, one of the take profit there is what, sir?
One of the take profit
0.00.
is 0.
The first take profit.
One, which is the first take profit, is 0.00728.
Okay, 0.00728. Now these are first take profit now, but now as it is now, I can't even estimate my profit, my estimated profit now. I don't know what I will earn. Then my losses, I don't know what I will earn. For those of you that enter signal and you put in the take profit and stop loss when entering the signal, these are you entering it blindly. Let's say I'm entering this coin with just $1.7 now. And I short the market using this market. I short the market. I'm sorry, 0.00172172. Then let's say I short the market now. If I click on short, it will open a position for me. It will open an order for me. This is my order. Now, why is it not opening the position? Is because I'm using manual. That is, I'm using limit order. But I think very soon to trigger it. Good, it has triggered it now. Here's my position. Now I have a running position now. Watch, and I also have my stop loss and take profit information. This is my stop loss and also my take profit information. You can view to see your stop loss. I seen it. Now I can't tell how much I'm going to make from this coin now, my estimated profit and loss. The same thing with the profit. So you can't tell your estimated profit and loss. So that is one thing you get when you enter a signal and you enter the take profit and stop loss immediately. Are you seeing it now? But it can be adjusted. How do you adjust it? I can come back here and cancel both the stop loss and the take profit here and manually come back to this position now. Come to the stop loss. This is the manual now to enter manual. So you can either enter your stop loss and take profit when entering a trade, or after it has triggered the trade, you can disable this button. You can disable this button. I don't need it. Just go to the trade under your stop loss and take profit. Tap the button. Then you manually enter the stop loss and take profit under the position tab. This is the position, take profit, and position stop loss. I will tap this point. Then I'll manually enter the point now. Now, if I'm entering this information now, I will know what I'm supposed to earn and what I'm supposed to lose. Now, my take profit is 0.00712 or so. Now, sorry, I don't know. I'll call the take profit again, sir. 0.00.
First target, which is the profit, 0.0728.
0.0. Is it 7 or 17?
17.
Okay, 17.
172. Now I see now, if the market now hits the first target is 0.00172, here is my estimated profit. But when you're entering it at first, when the signal, you will not see your estimated profit. I see it now. Now my estimated profit will be 1.83. Now then the stop loss now, the current market now. Here's the current market. Look at this. Look at this. You entered. Look at the information. This is when you entered. You entered 0.0018170. This information will guide you. This information here will guide you. Now look at the current market price, 0.0018179. So this will help you now adjust your stop loss. I'll come to this stop loss now. I'm not going to put my stop loss at this entry point. Sorry, at this market price because it's too close. I will take it to above my entry point. Now it's going to be 0.00185. Now at 0.0185, this is what I'm going to lose. 0.062. So this will tell you what you are expected to lose. You now look at, okay, this is what I'm expected to lose. With the market get to 0.00185, you should be able to do your calculations here. So when trading, what you're expected to lose, sometimes I make it what I'm expected to gain too. So I'm supposed to get 1.83. Then I will make sure I adjust this again. Let's say bring to 0.0088. Okay, let's say 88. 0.00188. It's actually far from the market. For this market to hit 0.0188, I'm telling you, it's going to take time. It will be difficult for you to go there. Are you seeing it now? So on your own, you can adjust your stop.
Okay. I have some adjustment to the target one. Sorry. I think the target one is 0.001765.
1765. You see now, my expected profit is 0.097. But my own target now, let's assume I want to pick target 3 as my target, what I want to close. So give me target 3 entry now. Target 3 price.
Target 3 price is 0.001710.
1710. Now, this is my target. I'm targeting target 3 now. So I will gain 2.0, that is $2 is my gain. Now, if the market flips against me, this is what I'm ready to lose, 1.19. And I'm sure it's not just going to go to 1.19. So, but if you move your stop loss closer to the market because you don't want to lose more, it will keep triggering your stop loss. The market might flip and hit your stop loss. You've lost some cent. By the time you hit your stop loss 3 times, you calculate the money, you've lost something. So make sure your stop loss is not too close to the market price when you enter a trade. Make it far. When you enter it, make it far. The market might flip that moment and to trigger your stop loss, because your stop loss is somebody's entry point. I think that your stop loss might even be somebody's take profit. That's how it is. Every stop loss and take profit, they're almost the same thing, because instead of using somebody's resistance or the resistance as your stop loss or as your entry point. Are you seeing it now? It is very, very important. Stop loss, entry price, support, all these things, all these mechanisms. We have this mechanism to guide you. Now, for me, now, if I'm to enter this trade like I gave you, I'm going to use my stop loss at 0.0185 because it's far from the market. I can even go and step and come back. It's not going to hit it. But when it's closer, now the market price of this thing is 0.01814. You now want to put a stop loss 0.018, let's say 182. For example, 182 as your stop loss. It's too close. Anything can happen to the market. Now, if you trigger your stop loss, you'll be losing 5 cents. By the time you lose 5 cents times 3 times, you know what you're losing. So why not adjust, take it far? Yes, there are times you record losses. Let me tell you one thing about crypto, why people lose. Now, we lost trade. Sometimes we decide on our own, we lose our trade ourselves. How do we do that? You are recording minus 20% loss, and you now decide to end the call, maybe close the trade. It is very, very wrong. Don't close the trade. Have a target of what you're expected to lose. Now, if the market you're getting minus 50%, that doesn't mean you're going to lose that trade. It's possible the market flips back again and you start making profit. Why? If market flips the other way around, what is it trying to do? It's trying to hit or take some people out of the market. Weaker hands will leave the market. Weaker hands are those people that have their stop loss close to the market. So when you experience minus 20%, minus 30%, don't worry about it. Leave it. But by the time you end it, you close that signal yourself, you've lost your amount, and you start looking for another position to start shorting the coin. Just hold it. We call it futures. It is not today. It's not called today. It is called futures. That means you can hold the coin. I think I've been one or two persons in the group have been examples. Okay, we've seen the examples where they hold signal for quite some time. Sorry, I think I left the page. Hello, are you with me?
Yes, I'm with you. I can hear you clearly. And we can hear you. I'm sure you just have some technical issue. Of course, it's going to come back and continue sharing. Okay, we have some questions in the group already. Can you do an example? I hope we are attending to your Emeka just mentioned that I hope can we use a live signal? I hope this attends to your question, Emeka. Okay. We're going to attend to the new questions. All right, thank you. So new questions, please paste your questions in the chat box. If you want, there's something you want us to address specifically, don't be ashamed. This is a training class. This is not just a talk. Ask your questions in the chat box. We'll use it as a reference point. Every question will be attended to as far as they have been pasted in the chat box. So VIP.
Okay. Okay. I just saw one question now from Mr. Femi. You said if you enter a trade at a certain price, if the price goes up, doesn't that mean profit for me? It depends. Now we'll call this is future trading. Future trading is two-sided thing. We have the longest, we have the shortest. If what you are trading against long, for example, you enter a coin now, you are shorting. What that short means, you are predicting, you are speculating that the market will go down. If the market is going down, you are making profit. That's when you enter. You are among the shorters now, those that want the market to go down. If the market flips and start going up, you are not making profit, you are losing. That's how it is, sir. You are losing. It's only when you are trading for the market to go up, that is the long. You are long in the market. If the market is going your direction, it's going upward, you are making profit. But if it's going downward, you'll be losing. That is what it means. So if you enter a trade and the coin is going your direction because you're longing it, good and fine, you're making profit. But if you're going the other direction, you are losing. So that's the clarity of that question you just asked now. So it means both sides. If you're trading long and the market is going down, you are losing. If you are trading down and the market is going up, you are making profit. I don't know if I'm able to answer your question, Mr. Femi, sir. Okay, if I have, okay. Then another person dropped a question. Please, how do you apply stop loss take profit while the trade is going on good and fine without closing the trade? Noted. Okay, I think this should be previous message, not today's message. Okay. Any other message? Okay, no other message. So let's just quickly take a rundown through what feature is all about. Then I'll be checking the chat box. If you have any question there, I will attend to those questions. So for those of us joining for the first time, please, I will just talk about, okay, explain the target one and the rest targets. Why? Okay, when a signal is sent, good and fine. That's a nice question. Now, I will explain it now. You are giving target one, target two, target three, target four, target five. Now, you want to take profit. Now, those target now is, we just presume, okay, your greed level should be either in target one, maybe that's where you want to close the trade, either target two, either target three, either whichever target, it's a personal thing. Sometimes I wait for the last target myself. That's how I look at my trade. I keep holding a particular trade for 2 days, 3 days, because I'm targeting either 4 or 5. But in case it doesn't flip to 4 or 5, then I'm okay with target 3. So what to do is this now. If we have position stop loss and we have the normal take profits and normal stop loss. I will explain those two now by the time I start, talking about the stop loss and take profit later. Now, to explain this now, target one, this is what it means now. If you set your target one as your profit, if the market hits that target one, it will close it. But you said you don't want to close the signal. Hey, somebody has ended it. Okay, I'm actually looking at the chart. Okay, I was actually looking at the chart. It said if the trade is going against
lever USDT, the one in the group now, so we can use that to explain what they.
Oh.
We can use it to explain
Okay.
2, 3 for them. The current signal now, right? Lever. Am I making sense?
Okay.
You can
explain. Yes.
Yes. All right.
Now you say if the trade. Okay. Now you say if the trade is good. Somebody is asking the question now. Based on the, okay, please explain the target one and the rest target when the signal is sent. Now, target one is when you want to close a trade. If you pick target one as your closing trade, you set target one as your take profit. Once it hits target one, that trade is going to close your position. You are no longer in the trade. Now, if you set target two, once you hit target two, it will close position. You're no longer in the trade. Whichever target you select, once the market hits that target, it will close your trade for you. That is what it means. But if you want to still remain in that trade, are you getting it? Then you don't need to put what they call take profit. You don't need to use those target as take profit. You can do it manually. Once you hit target one, you can close some fraction of that trade. I'll show you how to do that. You can close some percentage of that trade and you still remain in that trade, but your lot size will reduce. I will explain that lot size when I'm showing us a comprehensive video of how all these things works. You understand? So you can still close your market and close a trade. Sorry, close some position, that is some profit, close a particular profit and still remain in that trade. You can, when the market hit target one, you can close some fraction and still remain that profit. Hit target two, you can still be closing until you take out the complete target. I will show you how to achieve that, but you not earn more. By the time you close little lot size of those as of that particular asset, your earning will be lower. So it's either you set a particular target and say, this is my target, this is what I'm leaving the market, and once you hit, you are out of the market. So target has to do with your greed level too. So if you want target 5, that's your green level. If you want target 4, that's your green level and all that. So in case it doesn't hit any of the target, alternatively, you can use stop loss to take out profits, which I will explain. These are strategies. I will explain the strategies later. So now, like Mr. Gideon said, he said, if the trade is going against you, what do we do since you don't want us to close? Okay, it's not like I don't want you to close. Now, it's a strategy. We've been in the game for quite some time now, Mr. Gideon. This is how it works. If you enter a trade, maybe we'll give signal and you enter that signal late, you FOMO'd in. FOMO means fear of missing out. You don't want to miss out that trade. You want to just enter. You enter maybe late and your own entry point is a bit lower than those that entered earlier. Now, what you do is if the market is going against you and you are ready to lose $5, fine. If it has not reached that $5 you're ready to lose, still remain in that trade because the market might flip. That's what it means. So, but set a stop loss that once you hit, you be like, okay, this one, I can bear this stop loss, I can bear these losses. But don't leave it. Don't just allow the trade to reverse. It might kick you out because we have what they call support and resistance. When the market hits resistance, it's supposed to reverse back, go back. But if it breaks that resistance, that means our stop loss is no longer valid that moment again, because it has broken that resistance. So the market can flip and liquidate many people. So that's the essence of stop loss. Once we place stop loss close to that resistance or a bit above the resistance, in case the market flips and breaks through that resistance. If it breaks through that resistance, honestly, I will tell you guys, close the trade, because it has broken. So it can keep going the other direction and people will lose. That is the essence of stop loss. We place stop loss where we know that there's a resistance. So even if you do not close manually, once you get to that, so let it close the trade. It will save you losing your complete your own complete asset. That's the essence of that stop loss. We place stop loss at a resistance level. Then sometimes the support is also another thing. Again, when you are shorting market and there's a support and you break that support, if you place take profit under that support and it break that support, I'm telling you, you will not enjoy more. So sometimes I don't put take profit on my trade. I allow the trade to run, because sometimes it might break that support and it will go deeper than the expected profit I want to, and I'll earn more. Like the on IMX now, when I told us to trade IMX some days ago, I did not put stop loss and I've got almost 900%. If I put stop loss on that trade, I would just end up getting 300 or 400%. But because, sorry, if I put taking profit rather, I would have gotten 300%. But because I did not put take profit, I left the trade running. The thing broke down the support and it kept on going down, and I made 900% on that token. I seen it now. So sometimes take profit limits your earnings too. Stop loss reduces your loss. Take profit, you can either, if you have a target, fine. If you want to earn more targets, remove the take profit. But if you don't want more than that, just place take profit. Whatever you get, that's what you want. But sometimes I remove my take profit and I manually, adjust it or add it, so I make more. So because take profit can limit your earning, yes, it limits your earning. Sometimes it also helps you get what you want. So all of these things, practically, I will show us how to do that. Let's seriously, okay, somebody say that now again. Seriously, I'm new in crypto. Can you please, sir, break it down? I'll break it down practically. Practically, we'll do this like a novice now. Let's assume we are novice now. I'll show us how we can go into this thing as novice. So first of all, I want you to understand what crypto future is all about. It is very, very important. Crypto future is very, very important. So I'm going to share my screen. Just going to be short, less than 30 seconds, 30 minutes explanation on crypto future. So you understand this very well. They will now do the practical. Okay, very soon we'll be rounding up. Okay, I'll be rounding up my own part of this whole thing. So I'll be sharing my screen now. Mr. Bimbola, I don't know. I can't share my screen from here.
You're a co-host. I think you should be able to share your screen.
Yeah, so yeah, that is on my mobile phone I can share. Okay, that's the one I use. So on
Okay,
the
which
PC
one
now, I
are
want
you
to
using
share
now?
presentation now. On the PC now, I'm trying to share
Are you using two devices?
the presentation
Okay. Okay,
on the PC.
sorry, let me make you co-host.
It's showing
All right, done.
host disabled participant sharing.
Okay, carry on.
Okay, sir. Okay, I can do that now. Thank you very much, sir. So I'm going to share a presentation. Okay, and it's going to be brief. It is going to be brief. I hope you're all seeing the screen. It's going to be brief. I'm not going to, the explanation, everything is self-explanatory, okay? We'll talk about feature here. And here are the content. Most of this content, we've talked about it already, okay? The introductory part of it, what, crypto feature is all about, how it works, the advantages of crypto features, trading, then the risk of future trading, because there's risk. We'll talk about the risk. I always hit the risk. Then choosing a cryptocurrency future exchange. We have so many exchange you can trade with and the rest of them. So this is just going to be less than 30-minute presentation. Then we'll dive into the practical aspect, okay? So I will start from what crypto future is all about, okay? Now, when we talk about crypto futures, we actually mean what? An agreement between you as a buyer or as a seller, okay, buying a specific cryptocurrency at a predetermined price on a future date. Now, what we've been doing all this while, we are trading futures, good and fine, but we have different types of traders. We have the day trader, that's what we're doing. We have those that trade future for 1 week, 2 weeks, mid-term, long term, and all that. So that is what they call futures. You trade for a long period of time. So cryptocurrency future are financial agreements where you commit to buying or selling a specific cryptocurrency asset, just like we drop the signal on IMX, liver, and these are specific cryptocurrency asset at a determined price on a future date. Now, the determined price is when you enter a coin,
Maybe because of network, we lost Don VIP for a while, but I'm sure it's going to be back shortly. So I don't interrupt what he's saying. But for the newbies, cryptocurrency is a digital asset. It is not physical, but it can be traded against each other. So carry on, sir. Okay, I think he's back now.
Can you hear me, sir?
Yes, we can hear you.
Hello, can you hear me, sir? Okay. Now, like I said, it's a financial agreement where you commit to buying or selling a specific cryptocurrency at a predetermined price on a future date. Now, what do you mean by predetermined price? Now, we drop a signal and I will tell you enter at a particular price. It could be that moment that's not the current price of that market. Maybe the market might hit that price maybe the next 1 or 2, 3 months. You understand? Then you enter at that price. Then you just wait for the market to trigger that price you have. That's the predetermined price on a future date. That's how it works. Then now, this is different from regular cryptocurrency trading, which involves owning that asset. Yes, owning the actual digital asset. For example, now most of us have been trading sports. Now, for example, they'll tell you, okay, buy a particular coin and hold it for a long time coin. That is spot trading. That's the regular cryptocurrency trading where you use your money, you have USDT, you buy a particular asset. Let's say the asset you end up buying is what do you call it? Maybe you buy bake. Yes, you end up buying bake. That's the particular asset you're buying. Then now you have that asset now. Yes, you have that asset in your hand. Now, anytime the market goes up based on the time frame you want to sell the asset, you sell and you get back your USDT. So that's how, but this one is not like that. This is not like that. This one is you are trading with your money. That's what you are trading with your money, your USDT. Once you lose that asset, that money, you've lost that too. You're not keeping any asset. It's not like the regular one that you convert your USDT to hold for a long period of time and you have intent of selling it later. So anytime you sell it, fine. Anytime you don't, you still have, at least if you sell, you still get physical cash, which is digital cash back, which is your USDT, or you convert to whichever pair. So it is different from regular crypto trading, which involves owning that digital asset. So understanding this concept is fundamental for everyone to consider future trading. Yes, everyone who want to consider going into future trading. Okay. Now there are two major key features in future trading. One of the key major features is leveraging. Now, what is leveraging? Now, leveraging allows traders to control larger position with a small capital. Now, I will show us, please, I want somebody to take note of this leveraging because we'll talk about it. Do you know that the current market price of bake, okay, let's say of bake could be $2 per one bake. Let's assume bake is $2 per one bake. Under spot, normal regular trading, bake could be $2. That's the price. But if you want to trade bake in future, do you know that you can use $1 now, $1 that you have to accumulate like 20 pieces of bake on future? And you'll be like, wow, yes, it's possible. The leverage is because the leverage, they will allow you control larger position with smaller capital. With $1, you're getting 10 bakes. But in normal regular cryptocurrency, it's not like that. Are you seeing it now? So that's the advantage you get when you trade futures. And when you make money with the help of the leverage, it multiplies your earning. This is our show us practical. You know, it might look confusing. What is he trying to say? Don't worry. Leverage itself allows trader to control larger position with a small capital. Now I can use $1 to trade future and I get $5. But that $5 you cannot use it. You cannot use $1 to buy even the bake that is less than $2. You can't. And if you want to make, you will not even make up to $5. So leverage will help you. It amplifies your market. It amplifies the percentage of that your margin, rather. It amplifies it, it times it, it multiplies it. So now we also have what they call speculation. That means profits from both rising, that is long, and falling, which is short market. For example, now you speculate, we drop signal or then short this coin, that's a speculation. We feel okay, this coin has actually gone up. We speculate this market is going to go down and it will go down. If we tell you this market is going up, it will go up. So I can be a trader that wants to short while another person is longing. Then if the shorters have upper hand against the longers, the market will go to the shorter. The favor will go to the shorters and they'll make profit. But if the longers, those are long are stronger than the shorters, then no matter how more we put, I will keep shorting it, will get liquidated because the stronger hands will always win. That's how it is in the market. So you can profit either from both rising and both. So let's say a coin has pumped up. You feel okay, that it's time for me to, you can short a coin and later still long the same coin. So that's one thing about future. But on spot, it's not like that. You only buy the asset and you keep. You want to make profit. Whenever the market hits, maybe doubles or maybe get on up, that's when you sell. But you cannot trade short. You cannot trade short on spot. You only buy an asset and you sell when you want to sell. But future, you can trade both sides. Whether the market is going long, fine. If you're on bull run, you keep trading long. When it's discovered that we are approaching bear market, you can short. You know that there are people that started shorting Bitcoin when Bitcoin was $60,000 till when it got to 16,000 plus. You know how much they've made? Imagine you put in just only $5, for example, when Bitcoin was at 60, or let's say $10, and you short it to 16, you're making thousands in dollars. It's not like if you use something like 50x leverage. With $5, you make thousands in dollars. But it's not just possible on spot. You can't do that on spot. I seen the benefits when you trade futures. There's benefits when you trade, and when you understand this fundamental. Then we'll now look at how crypto future works. Okay, crypto future, like I said, it involves two parties, the long position holders and the short position holders. So the long position are those buying a contract, expecting the price to rise. So if I tell you, let's long this trade now, that means we want to buy a particular contract, a particular asset. Okay, and we're expecting that price to rise. So we can enter this trade now, hold it. So the market might start going down. Don't worry, just hold your position. When the market flips our direction, you make something good out of it. So that's just for the long holders. Then for the short, the market has pumped, has gone far, it has, gone far, and there's a resistance holding in the market. We can tell you this is the right time for you to short this particular asset, the right time for you to short this contract, then you short it, then you are expecting the price to fall, you make profit. So that's the two parties involved, the long holder position and the short position holders too. And expiring dates on future what I've not started seeing. That's why sometimes if you always trade futures, sometimes that exchange can announce, they can drop an announcement, okay, this particular coin will no longer be on futures again. It has expired, will not be there. So if you're trading futures, don't go and trade futures, always trade futures and make sure that you know the expiring date of those assets. So you don't go and trade futures.
Please, you can hear the speaker, type in the chat box. Just type 111 in the chat box if you can hear the speaker. If you cannot hear the speaker, I want you to type 000 in the chat box. Just type 00 to indicate because I cannot hear him. Okay, I want to believe it's back.
I don't know why I'm being logged out, whether it's network. Okay. All right. Okay. Futures has expiring date, like I said, it has expiring date. So always take note of the coin you are trading, because if it expires and it's no longer on that exchange, they will just, you will not see any. They will close your trade and you might even lose your money. So always make sure that the coin you are trading, you know the expiring date. Although we know all that, I do follow some of those things, but that's where fundamental comes in. You are trading the coin, please. Fundamental analysis is very, very important. And like we'll start very soon in the advanced class, I will show us, those of us that don't know how to read chart, at least you should have little knowledge of chart reading, how to read charts. I want us to learn how to read chart. I will be dropping daily, okay, by step how to read chart. You should just support your entry point on your own, even without signal. You can enter market with just little basic knowledge of all these things. You can trade long or short. We'll teach you all of those things in the advanced class. Then we have the margin trade. Okay, margin requirement. Trader must deposit a fraction, yes, a fraction of the contract value as collateral. Okay, this is quite different from the spot. Now you want to trade on spot. Spot, you have your USDT. You are converting USDT to that coin you want to buy. But in future, your money, your USDT is moved to that future wallet. Okay, and that is what you use to buy the contract. So if you lose that contract, you've lost it. So your money becomes your collateral. I think so. So the money is collateral for the asset you bought. So if you lose that as that contract, that asset, you've lost the USDT you have there. It's not like the spot that if you buy and market is still going down, at the next future, the market will still pump, you still see your assets. This one is not like that. If it goes down and liquidates you, that money, that margin is gone. And if you make profit, you keep seeing the profits. You see your money and all that. So you lose the contract, you've lost the money. You make profit, you see your money. So then leverage, like I said, leverage amplifies gain and losses. Be cautious. Now, just like you're expecting to gain $200 from a single trade because you're using 20x leverage. We also mindful that you can also lose $200 from that same trade, because the same leverage that amplifies your gain still amplifies your losses too. So you should be careful. That is where will now make use of stop loss to reduce losses and take profits when there's profit for us, when you see the need to take profit. So, but I will show you how to see in the most of us might think this thing is not, it's not a child's play. Everybody those that will join that, maybe that will join the premium group, the other section, the other classes. Now there's something I will show us, okay, how to leverage on losses. Like if you are losing, how to make profit from losing. See, trade, there's no trade that is bad, there's no signal that is bad. Okay, what kills a trader is your leverage. Yes, leverage kills a trader. Okay, so if you have lower leverage, I'm telling you, you can remain in the trading 1 month and you don't get liquidated, you still make profit out of that trade. Now, future trading, now, where open most of our eyes, there's money in future trading. What we are doing is just the basics. By the time we hit December, we'll get to December, I'm telling you, I just pray we'll still be together. Yes, definitely we'll be together. We'll print out millions in dollars, I mean millionaires in dollars, because I will tell you when to enter. If you want to buy sport, go and find, you can buy sport. You know, with just $5 or $10 or maybe $20, depending on what you have, you buy a coin at that volume. There's a particular level when you need to invest, and you put in just small amount, whatever you have, just put in there and you trade long till the next bull run. I'm telling you, you will smile. You will not know that future trading is very, very sweet. I keep on saying that future trading is sweet. People think it's not sweet. It is very, very sweet. What I tell you, we haven't traded. This is just bear market, so sometimes we have little, losses. And if you approach bull run, I'm saying this because I've done it before. I have grown $10 to $1,500 within a month during bull season. I'm not joking, and it's a challenge I give to other of my, my colleagues too. So it's something we've done time with time. This is not my first time. I've stayed in this industry for years, so there's money in it. So I've experienced trading during the bull season. I've experienced trading during the bear market and all that. Each season I see trading, and the method you applied last year is not the same method you apply this year. So whatever we are sharing with you, we are giving you our own experiences. We don't want you to experience those losses before you now learn. So we don't want you to experience what we're giving you this, so that you learn from the mistake we've made. We've made so many mistakes. You see greed, whether you like it or not, even after teaching this, most of us will still be greedy to still lose. It's normal. You get the experience. Tomorrow, you will not be too greedy to take profit when you see profit. So there's money in future. I will tell you, just wait, but let's experience December, November, December, when people start accumulating token. I will tell you, buy this coin, put this amount, whatever amount you, then hold it. Even if the market is going down, don't worry about it. I'm telling you, by the time you hold that coin to the next bull season, you keep buying what they call DCA. I will show how to DCA a particular token. This is practical, what you get in the other group. Now, how to DCA a particular token. When you think you are losing, don't worry. You keep buying lot size. I'm telling you, in the next video, you will smile. I mean, we'll print out millionaires in dollars, not in naira. I'm not talking about naira. With a little fraction, you make money from future. So there's money in future trading. There's huge money in future trading. So leveraging amplifies your gain, and also it amplifies your losses. So learn to use, leveraging very, very well. Then we have benefit of crypto. Yeah, there are benefits. Okay. Now we have the leverage trading, which I talked about. It maximizes your losses, and it maximizes your profit and also your losses. So it amplifies it. Now, crypto futures allow traders to amplify their position with leverage. I talked about the leverage part. Then it enhances profit. Okay, it enhances profit potential, but risk. Okay, requires risk management. There's also risk too. Risk management is another thing entirely that we need to talk about in this industry. How to manage risk, it is very, very important. Now, the second benefit is risk management. Crypto future provide tools like stop loss and take profit. So these are two major mechanisms that will help you manage risk. If you know how to use stop loss and take profit, I'm telling you, you will not be telling us, you hardly record losses. Yes, there are days when you might maybe lose little fraction, but if you look at your winning, you're winning, because as it is now, don't look at it that we don't lose too. I might trade 5 times in a day and I will lose one trade one day. But if you look at what I lost, it's small. I'll tell you, I lost maybe small. I'll be like, it's not actually losses. So make sure you have more of winning days than losing days. That is what I want us to know. I want us to get to the point where our winning days will be more than our losing days. Maybe you trade 5 times in a week, you lose only one day. You are still on plus. And maybe what you lost that day is just a little fraction because of the help of the stop loss and take profit. That is what I want us to do. So I want you to get to that point where you'll be recording you'll be recording 99% winning days, just only one day loss. And that loss is something you'll be like, okay, I didn't even lose anything, because one day profit can cover the losses too. So all those things, risk management, you need it, how to make use of stop loss, and also how to make use of the take profit order. Now, then it helps mitigate risk and protect investment. Some of us enter a trade, you don't consider the risk. There's what they call risk level by the side. A risk when we need to learn how to manage your risk. Check your risk. Is it high or is it low? If it's too high, I'll show you how to reduce your risk. Okay, there's way you can reduce your risk. It's very, very simple. I'll show you how to do that. In case the market flips, you still remain in the market, you not get liquidated. Then we have market liquidity. Now, crypto future often have higher liquidity than spot market. Yes, yes. Crypto futures trade around the clock also. 24, you can trade at, most times I trade around 2 a.m., 1 a.m. when market closes and when market opens, I'll be there. Most of the signals will drop. Maybe we'll be awake throughout the night to make sure we get a very good entry point and we'll state it, not drop it. So it's just that I don't want to start stressing some of us. Around, normally I drop signal around 5. I can do my time, okay, 5, 6. That's where I'll get. So if you're awake around 5, 6, you must have made profit before that people will not join the market. So you can trade at any time depending on your analysis. If you have a clear way, maybe around 2 a.m., 3 a.m., I wake up and I trade. I'm looking, this is my business. So I'm always around, I'm always online 247. Though there are times I rest, we need to rest too. So I just want you to know that the crypto market is open around the clock for traders. So we don't say, okay, if you miss trading in the morning, there may be signal you trade maybe at night and all that. During the midday and the midnight, you see something to trade. Just know your fundamentals very, very well, and the technical analysis, you definitely make something out of the trade. There's money in this space. Then we'll talk about the risk of crypto futures. Yes, risk of crypto futures. Now, it is very, very important to acknowledge the potential downside, such as the risk of losing more than your initial investment due to leverage. Yes, this is still talking about leverage. Yes, you can lose your money. Like I said, if you're targeting to make $100, at the same time, the reverse might be the case. You might end up losing $100 too. I spell out these things, but with the help of these two mechanisms, take profit and stop loss, you will not, all these things, this risk information, this warning, you will not even experience it. I've tested it. I've lost thousands of dollars and I've made thousands of dollars in dollars too. So we are talking about experience here. So you can also lose more than your initial investment due to leverage. Everything is pointing towards that leverage. So I want you to know that leverage is something you should take very, very important. Take it very, very serious. Leverage is something you should never joke with. Because because when you increase your leverage, we're talking about the greed level now. When you reduce your leverage, we're still talking about your greed level. You're reducing your greed level. Okay, you have $1, you want to use $1 to make $10. You have to increase your leverage to 50 or 80 extra. You get that, but it's very risky. Just like you're attempting to get $10, you lose $10 too. So you reduce your leverage. Now I will ask us 1 or 2 questions again, and that if you're giving at the end of the day, I'll ask you, if you're giving such amount, what are you expected to trade? You discover that most of us want to trade more, and that's how I'll tell you, okay, that's how you lose the money. The kind of question, the way you answer the question I will throw at you will tell me the kind of money you've been losing on trading. So I will show us how to trade well, what you're expected to invest, what you're supposed to use as a margin, and what you're supposed to use as a leverage. If possible, I can also show you how to calculate your profit, P&L, to manually, although I'll do that in the group. So understanding this risk is crucial for managing them effectively. Yes, the market is very volatile, very, very volatile. Yes, you might enter a coin, be like, this coin is not moving, but the day or the moment the market will flip, you see the volatility of the cryptocurrency. Sometimes we have news, SEC news, and all these news during news period. We don't trade like today. I didn't drop signals after I told us to repeat some of these signals. Why? Because Bitcoin is hitting maybe a particular support, and maybe because of the resistance. So we are looking at all those features, all those mechanisms. You don't just drop signal at any time. Somebody will be like, you didn't drop signal today. It's because you're following fundamental too. You cannot be a profitable trader if you don't know fundamental. You follow news, know what is happening in the market. If there's any issue, maybe a particular exchange is folding up and all those things, you should stop trading, put your stop loss, because it can affect the market. Like this case with Sam, the FTX, and developer and all that. Now, if not because of the understanding or the way they don't want people to lose money, and they allow the man to sell his assets, just sell all those assets. I'm telling you, Solana will go back to $5. So many coins you're holding will go down. You will see losses. And me, I will not see losses because I will trade short and I will make profit all through. So me, I was even praying that they should just allow the man to sell it on, but they don't want it to affect the market. They're like, they sell bit by bit. And it's even paining me because I wanted them to sell everything off. So I'll just put my money and I'll make big money. I will tell anybody that has assets, oh, sorry for not selling your assets. You saw the news, you're supposed to sell. So these are things. Fundamental is something I don't joke with. That's sometimes we do fundamental, we mix it together with technical. If you're very good in chart, read your chart very, very, no problem, but you still need fundamental knowledge. Without fundamental, you're not going anywhere, because fundamental will always crush the technical part. The technical will just show you the direction. Okay, look at this candlestick. This market is going up, good and fine. That's technical analysis. But there's any fundamental news, it can crush that technical analysis, and you start from the beginning again. So in the market, there's what they call volatility. Cryptocurrency are highly volatile. So be prepared for rapid price swing, left or right, either upward or downward. like I said, it's very volatile. I can tell you long this coin, maybe 1 or 2 weeks can just come. It's like speculation. It's actually that direction we are telling you to go. But because we have bigger investors, these are, we call them ways. These will have, they control USDT in large quantity. They will just trade the other way around to liquidate you. So that is why we actually emphasize on stop loss. In case of this volatility, stop loss will help you reduce. But if they don't do all that, you make your profit based on the signal that is given to you. So liquidation, if the market moves against you, your position may be forcibly closed. You are trading a coin and you don't have enough fund and all that. If the market moves against you, maybe via volatility, you lose your position and to close your trade. So you've lost that money you're trading. Not everything. It depends. If you're using isolated, you will still remain in the market. Maybe you just isolated some parts from your available wallet. If you're using cross, then you can actually wipe off everything. If you have $1 million in your cross, you're trading cross and it hits liquidation, you lose the $1 million. But if you isolate the $1, okay, inside $1 million, I want to trade with $20. Now, if the market moves against you and liquidate you will end up losing that $20 because you isolated $20 from the available balance that you have. So risk management, use stop loss and take profit. That is one risk management you should learn how to use. Okay, then we also have risk management strategies like setting stop loss, or that will show all those. That's why we keep on emphasizing on stop loss, how to use it. Please, if you don't understand it, call our notice, call the coach notice, call our boss. He will tell you stop loss. That's why the first video I created is stop loss, because I don't joke with stop loss. Myself, I don't joke with it. I play stop loss, but I may not play take profit because I'm very greedy to some point because I know what I'm looking for. You understand? So I play take profit, but I always eye that fourth to fifth, because I've been trading. It's not like the first one is not okay. But unlike me, you can take profit at any target of your choice. But it's better you take, see, the important, both of them are okay. But I prefer stop loss because it limits your losses. But take profit is based on your grade. You can take profit last and all that. You can know the market will always favor me if I'm going downward and it's going downward. I don't put take profit. I watch it and I close it manually. So, and if I'm longing the coin, I don't put take profit because I know it will favor me if it's going up. I'll take profit manually. So, but if you know you're not going to be online to monitor your trade, then please apply take profit and leave the trade. In case the market hit your take profit, it will close it. So because it might hit that take profit and free back. So that's the essence of take profit. So if you know you're not going to be online to monitor your trade, apply the stop loss and take profit and let your mind rest. Okay. So it is very, very important. So these techniques are essential for long-term success in future trading. Which techniques are we talking about? We're talking about the stop loss and the take profit mechanism. So choosing a platform to trade with. Now we have so many crypto exchange. We have the Binance, we have the Bybit, we have the OKS, we have Get.io. You understand? These are platforms, these are cryptocurrency platform where you can trade futures. Okay. Now, one of the most popular one is the Binance, okay, and the Bybit. The OKS is good and the Get.io. Although there are restrictions in some country, you cannot trade Binance future, you cannot trade futures if you are living in US. Okay. Now there's a regulation, you can only trade sports, but you cannot trade futures if you're in US. Now, of recent, I didn't post the news, I was able to post the news in the group that even Bybit now in some country, Bybit, so you cannot trade. Sorry, in some country you cannot trade Bybit. So I think is it Germany also? I saw the news today where I think you cannot trade futures too on Bybit in a particular country too. So some country restrict trading futures while some allow it. So Nigeria allows, they've not create there's no embargo in trading futures in Nigeria for now. So you can trade Binance, you can use Binance, you can use Bybit, you can use OKS, whichever one. So depending on your location, if you cannot use Bybit to trade futures, try OKX or you try Get.io. It's okay. So that's how it works. Then check fees. You check fees, security measures, and user reviews too.
Please, if you can hear, type 111. If you can't hear him, type 000 in the chat box so that we can know.
Hello, can you hear me?
Right.
Can you hear me?
Okay, it's back. All right. Welcome. Yes, we can hear you.
Okay, good.
Yeah, we can
All
hear.
right. All right, we have trading strategies. Sorry about that, just a distraction. Now, we have different trading strategies, such as the day trading for short-term gains. Now, that's what we've been doing in the group all this. So most of us will trade for that. They were looking for give us this day our daily bread. Now, for those that do swing trading, these are the people that want to eat the whole bakery. You understand? You want to patiently wait and eat for longer. Yes, to capture longer price trend, providing option for traders. Now, I am both. You understand? Depending on the signal. So now, like the IMX and some other token I dropped, the existing coins that I will trade for long time. I will still list some of those coins. You can just write them that you can put them. We'll list some of those coins that you trade for a long time. When it gets to December or maybe the accumulation period, accumulation date, I'll tell you, okay, buy this coin, put in something small. Just like you're buying sport. If you're the kind of person that buy on sport, use $10 to buy sport. Why not use that $10 and buy futures and hold it? Do you know that what you make will be bigger with times 2,000% of what you're gaining in sport? So that just as you're buying sport, also keep something for future. I shared with us somebody that traded Binance when Binance was around $31 and he held Binance about 50x or so to when Binance hit $600. Do you know how much the person means? 50x leverage. And I don't know how much the person used, but the person must have made millions in dollars, more than 40 something thousand%. He bought Binance, he traded Binance long on Binance. With just 50x leverage when Binance was $31 and he held that position till when Binance got to $600. Do you know what that person has made? So that's the kind of target, the kind of mindset I have in future trading, and I want you to have the same mindset. So aside this, give us this day or daily bread we are doing, let's also plan for long-term gain because there's money in it. So the swing trading, is for capturing longer price trends. Okay, it provides option for traders to approach the market according to their preferences and goals. So those strategies we'll talk about those strategies in the other group. These are things that I will only I don't want to bombard with too many of these strategies as newbies as you're starting. So getting started is very simple. For newbies, you're seeing all the screenshots, you don't know how to get started. It's very simple. All you just have to do is make sure you have any of these, any of the wallet, any of the exchange wallets. Binance, okay, you can create an account on Binance, you can create on Bybit, you can create on Gate.io, you can create on OKX. Once you've done that, you cannot start trading future until you complete your identity verification, which is your KYC. So that is know your customer. Once you've done your KYC, you fund your wallet. These are steps to start. Fund your wallet with whatever you have. Okay, with whatever you have. But please, I tell people that future, whether you like it or not, entails money. Let's call it spade a spade. I'm always straight. I won't tell you, like I said, the method I applied years back when I used $10 to grow $1,500. That method I've tried it after that. I think I tried it last week. It didn't work out. It didn't work out because when I tried it was during bull season. It didn't work out. So method and strategy changes. So you need money to make money in futures. But it's not like that money you're going to put in big. You want to really enjoy and trade future without stress, without your mind, without you feeling, oh, you might lose your money. Then you need money to fund. Just put money. You can trade something small, isolate and all that. You make money. But don't come with the mentality of $1 to make $10. It's cool. You can do that. If the market flips and goes your direction, that means you'll be looking for 1,000% or more. If you want to use $1 to make $10, 1,000% is what you need. If you're using maybe 20x and all that. So, but 1,000% is hard to get. So the only time you get close to 1,000% is when you buy a coin, you feel like this coin is at the bottom and is going up. Like the IMX now, you can make 1,200% if you had entered long. And if you're making short, you still make 1,200%. So those kind of signals are rare to come. You don't see them every time. So getting started, you make sure you fund the wallet, then you pass a mini quiz. Some of this exchange, you want to set a quiz for you. Okay, they'll ask you a question, but there's always a hint. If you come across this quiz, click on the hint button, they will give you hints and just bypass that place and you are good to go. Then how to fund your wallet, you just move how to fund. How to fund is not too difficult. I'll show us video on how to fund wallet too. Okay, how to fund wallet. That's after the questions. I'll leave the coach to just talk about one or two things before I'll now come into how to do this practically. Then trading tools now. These trading tools are very important. We need charts. You need to trade using charts. Okay. Now, most of us, the analysis, let's say I'm into chart reading and the rest of them. Now we are traders. So I'm into fundamental analysis and also technical analysis. And we also have people that are better than me. I'm not really actually too good in technical analysis. I have, I think, to proficient level, but not really too perfect. So, but the level where I don't really base all my signals, my trading to technical. I follow more fundamental because fundamental has actually benefited me more than the technical is actually good. So just know the technical. You don't need to read audio technical. You draw your line pattern. You're looking for Fibonacci, movement, and all those things are not. They're okay. And thank God for some of you that actually have idea. I've been trading forex. So I didn't trade forex. So with your forex skill, you can actually apply it on crypto and you make money from it. So without forex skill, no problem. So, but at the same time, in the other class, maybe the advanced class, we'll show you. I'll be dropping even in this once in a while I can drop a chart for beginners. I can teach you, we'll teach you how to read charts on your own. You enter market, we'll teach you how to enter chart. You should know your support and resistance are the two major things. Then your these are indicators. Okay, so technical analysis are indicators. You understand? So these indicators will help you. Okay, know when to enter a trade. You analyze the price market. You know which one when the market is supposed to go down and all that. So trading tools are like trading tools like chart and technical analysis indicators, including fundamental analysis, are tools that empowers a trader to make informed decision by analyzing price pattern, trends, and market data. So you need those things. So we've been doing all those. We are the one doing those things for you. So you just to see the signal you enter. We've done all of these things. We've done all of the chart reading. We've done all the technical part of it. We've done fundamental. We've gone to the developers page. Oh, this coin. Why is this coin pumping? Is there any event? Oh, because we've seen those events that they want to buy into one particular whatever. We'll not bring all this information together to give you a signal. So you don't need to start, waking up around 12 a.m., 1, 2, 3 a.m. to want to get information before you enter signal. We've done all that for you. So that's the advantage or the benefit you have when we drop signal, because all of these things have been done already for you. So, but if you still want to start to get this knowledge and be doing this in yourself, so very soon we'll start dropping information about technical. We have materials I can actually list out for some of us to go through if you want to learn the chart, the technical part of it. So the common mistake there's always a common mistake in trading. Now, this common mistake, like if you look at all of these things, there's one particular thing that will keep seeing over and over again, and it is either stop loss, take profit, or leveraging. So these are things that you should take note of, because these are the common mistakes people make, okay, such as over leveraging and insufficient research. You just see a coin because you have this normal, oh, the coin has pumped, let me just short it. Do you know why the coin is pumping? Have you done fundamental? Do you know if they are dumping it? Maybe a coin is dumping. You want to long it. You don't know if developer have resigned ownership. If they are no longer holding that token, they want to close it, or maybe they're migrating to another contract and all that. If you don't know those fundamental, you will just be longing a coin that is going down, and it will just liquidate you. So please, research is very. Before I drop signal, I do my research. I do my fundamental, because fundamental to me is very, very important. Traditional trading. So make sure you do your research very well. And over leveraging is greed. If we say use 10x, use 10x, 20x. If you have enough fund, want to use more, no problem. That's the over leveraging. In case anything happens, if you call me, I will tell you, okay, this is the reason. I will not blame you. I'll tell you this is the reason why you're losing and all that. So, and when we give signal and you start seeing the market going the other way around, don't panic. Don't be like, let me close. If you close a coin, that means you've accepted defeat already. So if you close at loss, you've lost already. So allow the coin still run. As long as it did not hit your stop loss, it might flip back to the direction and you start making profit. But once you close that trade, you're accepting the fact that you've lost. You need to recover that loss back. So the worst thing, like I used to tell most of my friends, the worst thing that will happen to a crypto trader is for that trader to lose his or capital. So in no way should you lose your capital. Your capital should always remain. So make sure you build that capital. So if your capital is $100, let it don't allow anything happen to your $200. Even if you lose $1 or $2 for the $200, you'll see on trade, you recover it times 2 times 3. That's how it is. So you can build a portfolio. I tell you, once you know all of these things, you understand this future trading, you will not panic. Don't mind those who tell you that future trading, they're making money, they don't want you to come there. Most people associate with that, they don't, our future will just kill you, but they are trading it. There's money there. It's because you don't have the knowledge. If you have the knowledge and you understand all of these things, the leveraging, the stop line, enter and there. If you don't have knowledge of entering, although I will tell you that some of these groups, some of them just want to eat your money. Once you have this basic knowledge, like the chart trading on your own, you can enter trade yourself too. So we'll be giving you signal because we have proficient, we have people that are very good in analysis in the group. I'm not just the only one. They will drop signals and maybe I'll just arrange it them and I'll drop it, but they're very good too. So they'll give you signals to enter. And if you're not sure, if you have any question, please always ask in the group. We have a couple of hands there that can also help, that will help. So then placing your first order, we'll start with this. Okay, placing order, we have the market order, we have the limit order, we have the stop loss and take profit. Now, when I say market order, you are buying at the current market. Sometimes I will tell you CMP. CMP, when you see CMP, it means current market price. So if I say enter at CMP, that means you should enter at current market price. So you don't need to use limits to enter the trade. But when we specify the price range from $1 to $3, we're talking about limit order. So set a specific price at which you want to buy or sell the token. That is what limit order is. Why stop loss and take profit? This automate risk management. So that's stop loss and it automates what your risk management. We'll do this in practical in less than a few minutes from now. So monitoring and existing trades, monitor your position, keep an eye on the market development, adjust or close position as needed. So don't wait for me. I may not be on. Don't wait for either any of the coach or any of the boss to tell you go and take profit according to your greed. So once you know you've gotten your target, you leave. If you've made your $200, $1,000, you leave. Don't remain there. The market will collect it back. If you remain there, it's not your market. We have longers and shorters. So if you don't like the money, somebody else need the money, they will take your position. So keep your eyes on the market. If you apply stop loss and take profit and you'll be too busy, that mechanism will help you take profit when there's profit and it help you close trade at losses and you not lose too much. So, but if you're always active, maybe you don't have much to do, keep your eyes on the market. Okay, if the market is going against you, you can close very early. And it's better you close very early before you even hit your stop loss. If you feel this market is too volatile. Yeah, sometimes I do that too. Sometimes I don't wait for my stop loss. Probably like this market, I've been seeing this call, like this lever, and this lever have been going up and down. The momentum, the volatility is still high. Sometimes maybe you notice you're making profit, all of a sudden you see that again. You make profit. It's losing momentum. It's a fight between the buyers and seller who want to gain the upper hand. By the time it goes to your direction, then it will start going down. So that lever and even another token like that did something like that. You see profit to go back again to entry point or above your entry point, you start seeing red. That's how market is. So once you take profit, you know that if you've been taking profit at maybe every target one and the market is retracing, you will make a lot of profit before it to now go the main direction. But one thing about closing market and entering closing market is you lose position because you might close thinking the market will go up and it will not go up, and that's why you lose position. You cannot enter that trade again. If you're entering, you get liquidated on time because you're entering at the wrong time. So I like holding coin. I like holding trade. I will stay. If I'm recording, I'll just stay there and say this is where I die and all that, but I will not die. We'll make profit in the trade. So exiting trade. So sell the contract before expiration. So always sell the contract before expiration. That means if you're trading for long, maybe 1 year, make sure you look at this. I look at expiration of a contract before we trade. If I tell us to trade IMS or maybe BAKE, I'll look at the contract expiring. Okay, this coin will expire 6 months from now. So let's trade from now. Or we shouldn't even enter the trade because it's closer to the expiring date. So all those things are very, very important. So profit loss realized based on market price. So then in conclusion, crypto features allow you to speculate on cryptocurrency price movement with leverage. Then the caution aspect of it is it has potential, high potential for gains, but also for losses too. So just like the leverage, amplify the gain, it also amplify your losses too. So research, practice, and manage your risk. Very, very important. So this is where we'll end here. So if you have any question, please drop your question. We'll attend to these questions. While you're doing that, I think I'll set up my Binance. So we'll do the practical aspect, and I'll leave the floor for Mr. Abraham to handle some, if he has anything to say before we now do the practical aspect of all of these things we've talked about. Thank you very much. Thank you for the audience and for the PDF. Somebody said he needs the PDF. Don't worry. We have PDF material on technical analysis and all those things. I think I will try and drop one of those things in the group too. You can read too. It will help you. So thank you very, very much.
Thank you, sir.
You're welcome, sir. So Mr. Abraham, are you there, sir? Okay. Mr. Abraham,
yes,
are you there?
I'm here. Yes, I am.
So please, I don't know if you have anything to chip in. You can chip in while I set up my account and wait for other things.
Sure, you will be able to get the PDF for
So
okay, so cross and margin. I think I've taken that. How much is the minimum to start futures trading? There's no minimum. You can start with anything you can afford. You want to start with $10, you can start with $10. You want to start with $50, you can start with $50 and build your profile. Part of the things I got to understand in the futures market is, I always say this, is strategy. If you don't have a strategy, right? If you don't have a plan, anything will go for you. Anything goes. So when you are coming into this market, I want you to be very, very intentional. Have a clear-cut plan that this is what I want to do. If I go into a trade, I want to get to stop profit, so that you understand when to exit and when to enter. In trading, two very important things you need to understand: entry and exit. Entry and exit, because everybody is entering and exiting the market. If you don't know how to exit, you will lose money. If you don't know how to enter, you will lose money. this is the reason why we are here. We are here to offer guidance on how to enter the market and how to exit the market. If you listen and you follow instructions, I can assure you that you will be in profit more than you will be in losses. You will be in profit more than you'll be in losses. This place, the plan of this place is we are planning to groom a lot of people that become millionaires from trading futures. The moment you gain the secret of this market, you'll be able to consistently make profit from the market. If you don't know the secrets, if you cannot constantly maintain a good entry point and a good exit point, what will happen is that you continue to turn in circles. So some of us have entered trades, and we enter trade with at maybe a certain point, and we are seeing 10%, 20%, 40%. You are seeing 80%, and you didn't even adjust. You didn't even adjust your take profit closer. What will happen is that when the market bounce back, it will go back to the old point. So you need to understand how to adjust your take profit, which is what he's going to show on the live account today. He's going to also show you how to take your profit and adjust your take profit closer to the market point. So maybe when the market has moved, for instance, let's say you long to BTC. Currently, BTC around 26,000. You long it to, let's say, it's going to 27,500. The moment the market gets to 27,000, you need to adjust your stop loss to around 27,000 or around 26,900 so that it doesn't go back to where you're coming from. You know, if you don't understand this skill, if you don't understand how to maximize all this profit taking, what will happen is that you will continue to make losses. So you don't understand entering the market and exiting the market. This is a major skill, and this is why we're focusing on it for now. For people that are interested in going into the advanced training, congratulations, there are two different packages that can accommodate you. There is a package of $1,000 and there is a package of $500. These trainings are going to span for a period of 3 months. And there's the one that is going to go for a period of 5 months. So there's for 6 months, there's for 5 months. And then for the subscription of the, subscription to the signals, where you'll be getting these signals every month, there is a package for $49 and there is a package for $30. All these breakdowns are going to be coming soon. But between the period where these things are free, where we can enjoy free classes, I want us to be very intentional to maximize it. Learn what you can learn, use the signals, and see if it works. Because $49 for you to pay every month is a small money if you know what you are doing here. If you listen to instruction and you know what you are doing there, $49 is small money for you to pay monthly. If you listen to instruction and follow instruction, $30 is something very small. It's what you can make in a day. I've made over $30 today alone. So I know what I am telling you. I'm not making life very difficult for people. If you don't understand what you're doing, you might end up running in circles. But if you know and you know what you are doing, I promise you, these signals are going to constantly keep you in profit. Let me tell you, each resource person that works on dropping signals spend a lot of time. You understand? Before they release one signal. Don't think because you just see two numbers on the screen and you copy and you put it and you're in profit, you think that's how it works. No. People are working earnestly to make those things possible, right? I believe it's only deserving for them to get paid as you make profit. But I don't want to run this. This is a trading institution and it's not in any way going to be taking money from people, prop firm, a lot of those stories. I'm not interested. I want to empower people. I want people to get this skill and I want them to be able to get to know what they are doing. So if you want to go the extra mile to understand trading on its own fundamental, full, complete trading, it's $1,000. And you can go and check other places how much they charge to do full trading. I'm not telling you about just any type of trading. Where we have fundamental, somebody that is training you on fundamental, and we have someone that's training you on technical analysis. Then we also have the full trading also for 3 months, that's $500, right? So in the coming weeks, you're going to see those plans start to roll up, how you subscribe and all will come up. But in the meantime, everything now is free. Everything is zero charges, no charges for anything. Enjoy and use them to advantage. I don't know if the VIPs are ready for us, so that I can hand over the virtual stage to you. If you are
I am ready, sir.
All right.
I am ready, sir.
All right, over to you.
So I'll be sharing my screen now. It's going to be practical. So for the newbies now, you look at the ABCD. Now I'm not going to leave any stone unturned. So we're going to touch everything everything will be touched. I think I'm seeing a chart. I want to know how to place trade using the signal sense. Okay, I think we've done that before. So let me go straight to sharing my screen now. So I'm going to share my screen. Okay, I'm sharing my screen.
Hello. Please, guys, if you can hear me and you are in the call and you are getting value from this call, please, I want you to type in the chat box value. If you're getting value from the call, you know this is valuable. It has been helpful. I want you to have value while we wait for the VIP to get back. I think, thank you very much. I see Johnson, I see Victor, Mr. Paul, Zoom user. Why don't you join with your name, Mr. Zoom, the Zoom user? Please rename yourself so that we can also know you and and interact with you. So please, wow. I like this. Value everywhere. Thank you very much for your consistency. Yes, and that means we have active people that are listening. We have people that are actually here and they are ready to make money. By December, I want us to set a target. And also we're going to be having challenges. We are going to have challenges in the group where we are going to trade accounts and make profit and also maybe challenge ourselves to greater heights. So this is also going to be coming up. Also, we have some things that in terms of way of disseminating information, there is a WhatsApp channel in the group. I want you to join the link. I don't know if somebody can help me repost that. There is a WhatsApp channel in the group. So you can just follow the WhatsApp channel and then you will get updates from the WhatsApp channel. Are you ready now? VIP. The VIP, are you ready for?
Yeah, I'm ready now.
Okay.
So I'm going to share my screen. I'm going to be using my mobile phone, so to be easier. Most of us are using mobile phone to trade. So I'm not going to use the PC because I have two different accounts. I have the PC account and the mobile phone. So I'm going to open my Binance on my mobile phone. So for newbies, this is all what you need to, this is all what you need, you see. Okay, now here's my future wallet.
Go back to the, no, you are in future, just go back to the beginning so that they know how to enter features.
Yeah, this is Binance Home. This is Binance Home. Let me go back to Binance Home. This is our normal Binance Home and all that, So we have menus here. We have the home, we have the market, we have the trade, we have the futures, and we have the wallet. So I'm actually going to the wallet this time around. So I'm going to click on the future wallet. Okay. Now I'm on future wallet. What you are seeing now is future wallet, just like we have spot wallet. So we have future wallet. And in this section where I'm tapping now, that is our wallet balance. So we don't have any fund in our wallet balance. There's no fund in our wallet balance. So we need to fund our wallet balance. We talk about getting started. You need an exchange. This is an exchanger. Then you need to margin. You need to fund your margin. You need to fund your wallet. So we've not funded this wallet. How do you go about it? How do you fund the wallet? So I'll show you how to fund the wallet. So I'm going to click on this arrow. Okay. Once you click on that button, it brings you to this transfer page. You can either transfer funds from either your sports or any of the wallets where you have fund. So if you click on this small dot here, okay, it will list down other wallets where you can transfer funds from. So I'm actually transferring from sports. So if you actually have funds from funding, let's say from P2P, you bought USD from
I think somebody's
P2P.
saying he can't hear anything. I don't know if you tell them to type in the chat box, you can hear. Somebody's complaining He can't hear anything.
Yeah, we can hear him loud and clear.
Okay.
Okay. Okay, you can hear me loud and clear. Good. All right. Maybe I'll speak up a bit. Um, um, this is the select wallet. What I did there was I had to click on this small dot arrow here, indicating that there are other wallet aside Spot Wallet. So that means if you have fund in any other wallet aside from Spot Wallet, you click on this dot. Once you click on this, it will now show you other wallets, other wallet location. So let's assume you just bought USDT from P2P now. You might not see it under your Spot Wallet, but you see it under your funding. So you select funding to transfer the USDT you bought from P2P. Okay, so but since we don't have fund there, only move the little to our spot. So I'm going to select spot. So spot, then you now to where this is from which wallet to which wallet to our future margin. Like future margin, USD margin. Okay. So don't select any other but future margin. We have the coin future margin, we have the funding, we have the isolated margin, we have the cross margin. Just make sure, or by default, you'll be seeing this USDS margin future. So that is by default. So then the fund now, because it depends on what you're trading with the pair. If maybe the coin you want to trade with is on BUSD, then that means you have to convert your USDT to BUSD. If you already have BUSD, you select this and you look for other pairs. You have BNB, BTC, BUSD, and the rest of them. So we only have fund in our USDT. So this is what we have for the sake of this training. This is what we have. So I'm going to select the USDT by default. You selected. Then the amount you want to move from either your spot or from your funding, you indicate the amount instead. If you're moving $5, fine. If you want to move the whole $9, let's say I'm moving the whole, I'll click on maximum. Maximum will move everything in the spot down to this place. You confirm. Once you confirm, as you can see, we now have fund in our future wallet. We now have fund in our future wallet, so we can now trade. So now we want to trade. We want to trade this stubborn coin. I call it stubborn coin, this liver coin. We want to trade it. Now, here, this section is your pair. This is where you select the pair. So if we give you a signal, we say, okay, trade liver. Okay. Now this liver has gone beyond the signal will drop on liver. The entry point has changed based on the current market price of the coin. So if you want to trade that coin now, you just enter using current market price CMP. You don't need to enter using that, that signal again. So because if you want to use that entry point to enter, you'll be on minus already because that price we indicated in the signal is lower to the current market price. So this current market price is advantage for those that want to hop into the market right now. So now you can search for your liver here. So I can say liver, okay, liver USD. This is the coin we want to trade. Now we want to short it. Like I said, we have two major buttons, the short and we have the long. Now short means when you say you want to buy long, buy means you want to trade. You are trading for the market to go upward, okay? But if you are shorting, you are trading for the market to come down. So we want to short this market. We want to short this liver. So now I'll come to the sell, select the sell part. Hope you're all seeing this now. Then this is our leverage. But before the leverage and the cross, let me explain these two sections, these two modes. There are two major modes here, okay? The cross margin mode and the isolated margin mode. I will explain these two modes. Very, very important, okay? Now, I don't want to just go into the trading without explaining this. We need these two modes very, very well. When I talk about cross, I'm talking about we trading with this O capital. So whatever trade I use now under these cross settings, that means if the market flips against me and I get liquidated, I will lose. And unless I did not put stop loss, I will lose all of this money. But if I use isolated, that means I'm isolating some parts of fund. That means I want to separate. Let's I want to trade with $2 or $3. That means I'm taking $3 of this $9. So if anything happens to the market, I will end up losing only that $3, whether I'm adding stop loss or take profit. So I will start with this isolated. The reason why I want to start with this isolated is so that I can explain stop loss very well under the isolated margin mode and stop loss under the cross margin mode. And at the same time, to explain liquidity too, because this isolator will help us to explain what liquidity is all about. Now, there's something I do tell people, traders, if you want to trade, don't just say because you have $1 million, $1,000 here, you just enter with $200, $500 because you want to make $1 million. No, there are rules, okay? What they call portfolio management. Portfolio management is a different entirely, how you manage your portfolio. Now, I'm having $9 as my total wallet balance here. So I cannot just enter with $5 because I want to make extra $5 the next 100%. No. Now you are expected to trade with 3 to 5% of your trading capital when trading futures. 3 to 5, sometimes even 2%, depending on the lower you use, the lower fund you use to trade, the more you relax, you get relaxed because your risk level will be very, very low. It will be as if you're not taking risk. But when you are using high high what do you call it, high margin, because you want to earn more and you are taking risks also. You understand? So let's say I have $9 now. 5% of $9 is around okay, 10% of $9 is around how many? Just close to 9 point something cents. Okay, 90 cents. So now if I'm to use 5% of this $9, I'll be using about 40 something cents. So let's say 40 cents is 5% of this $9 or 4.2 cents. So that means I'm going to select market price. Okay, because I want to enter this coin at market price. I don't want to use limit price. When we say limit price, that's where you enter the price indicated in the signal. If you enter 0.00, you just type in those figures here. So, but I want to use market price, so I don't want to waste time. I will come to this place, select market price, which is current market price. So I'm entering it with any of these markets. This is the current market price. Any of this current market price here, from this red here down to this place, this is the current market price. So it will trigger any of the current market price and open the position for me. So I'm entering at, I'm using 40 cents. Okay, let me just say I'm using 75 cents. So instead of 40 cents, I'm using 75 cents. Look at it. Now, this is the amount I'm using. The cost price now, I'm picking 0.7 this. I getting it now. So now this is what I'm spending. Okay, under 20x leverage. I seen it now. 20x leverage. 20x leverage. Oh, sorry. I made a mistake. Let me go back. Okay, let's say I'm using 90 cents, okay, which is against the 3 to 5% rule. I'm using 93 cents just because I don't want to wait. I just want this to be easier.
This
Now
place
I'm
you are
using,
moving, this cursor
sir.
you are, the cursor you are moving, what is it called? Or for the
Okay, you mean this
percentage?
and this stuff?
Yes, sir. Yes, sir.
Now this like it's just like a gauge, a lever. So there's something using adjusting the price of coin you want to use, because you cannot manually, if you know the quantity size of the lever. Let's say I want to pick 73,000 lever. Now I can type 73,000 lever here, 73,000 lever or 7. Okay, you see it will tell me I'm using $6, but you don't know the quantity because you are using leverage. So leverage is an amplifier. Under normalcy, this 73,000, if you want to buy this coin in the market, you cannot use $6 to buy 70,000 pieces, 73,000 pieces. So this leverage is amplifying it, amplifying the lot size of this coin. So, but with this gauge, you can just, this gauge will help you to see the cost price you want to use in buying that coin. So just like you're adjusting it. If you want to use $1, you just take it to $1. Okay, begin with $1 or so. The more you increase, you can use all your fund 100%. To use all your 9.32 to trade. So it's just like a gauge to select price.
What
Okay,
is the
so
standard point we should use for each trade?
that is what I'm saying now. I'm talking about isolated now. Now, since I'm on isolated, now I want to show you how to isolate and still be in the market. I want to explain the isolated very, very well. And I said something, the golden rule, make sure you use 3 to 5% of your trading capital to trade. Now, what I'm having here is $9. Now, and I want to trade two different pairs, two different coins. Now, do you know that I have to isolate this coin? I'm not going to use this whole $9 to trade on lever. I seen it now. So that means I have to divide this coin, this amount, into two parts, which is 4.5 or so, or 4.6. So understand, per trade, 4.6 for one per trade, another coin 4.6. Now I want to enter lever now, and I'm using isolated because there's no way you can divide this. I cannot just enter this trade with 4 points. It's very risky. So understand, it's very risky to enter with 4 points because it's higher. So 4 points now, I'm dividing this one into two now. $4.2. 5% of $4.2 is something that's very, very small. It is very, very small. You understand? It is very, very small, but I just want to learn something from here. So I'm trading with just, I want you to grab something. I'm trading with just, okay, 75 USDT. That's the cost price I'm spending now out of this 90, okay, 9.42. Now I'm using current market price. If I click on sell, watch, it will trigger an open position for me. Now, remember I said I'm isolating some price now. Now I've touched out of the $9. Remember, I'm supposed to use 4 point something to trade this coin. 4 point something. Now I've used the 5% out of the 4 points to trade, which is this margin 7.0. Okay, 74 cents is what I'm using to trade this coin. But look at the margin, look at my risk. Check out my risk here. My risk level is it not too high? It's showing 39.91. I want to grab something that is very high because what I'm trading with now is 0.74, 74 cents is my margin. Now, do you know that if this market goes up or goes down now, I will lose this 74 cents because this is the only thing I'm trading with. And look at the market price. The market price of this coin is around 0.00182. And look at the liquidation price, 0.0188. So that means the liquidation price is closer to what? The market price. It's closer. to the market price. So now for me to reduce, this is what they call risk management. Now my risk is very high because if this market flips, I'll lose everything here. So I want to reduce my risk level now. So what do I do? Remember, I said I'm trading with 3 to 5% of my portfolio. Now I've used 74 cents to trade. So I still have about $3, right, left from this margin now. $3 left also from this margin, or 3 point something dollar to service this trade. So that $3 now will now come to this margin. This, I'm telling you how to manage your risk now. Okay, that's risk management now. How to manage this risk level is very, very high. I will come to this margin now. Remember, I have 3 point something dollar left. Now I want to service this trade with the remaining balance now. I want to, because I'm using isolated. So the remaining balance here from this available, now I want to remove the remaining $3 now, because the remaining $3 is meant for this trade. I send it now because if I don't service margin here, this market might liquidate me because the risk here is too high. I want to reduce this risk to either 5% or 6%. They will not have rest of mind that yes, this trade, even if I did not put stop loss, it will not liquidate me. I get it now. There's what they call zero liquidation. I will show us how to apply zero liquidation. Now, if I click on this plus margin now, and I add $3, now what I want to do now is I want to add margin. This margin I'm adding or I'm adjusting is to service my liquidation. I put in $3 now, for example. If I now click, you see, I enter $3. Okay, let me erase something so we notice something here. I erase this now. Look at something. Something happened. Here, look at my liquidation price. Estimated liquidation price after increase. Now it's around 0.188. Now, if I should add $3 as a margin to service liquidation, what happens? You see, my liquidation price will now go towards 0.0224. That means for this market to liquidate me, the market price of this coin will go to 0.0222, which I will beat my chest and I'll tell you it's not just easy. Now I've said, okay, now look at my risk. My risk has dropped to 8%. So I can go and rest because this market has 0.183. Before I have to go to 1.8456 and go to 22. It's except something happened, we are approaching Buron. We are approaching Buron from this particular short position. I seen it now. So now I've used my $3.7 total now to service this trade. Now I've isolated this margin from my available. So this $5 now has nothing to do with this trade. So if I want to lose now, if the market eventually, let's say peradventure now hit my stop loss now, my liquidation price, I will lose the whole of this $3.74. I seen it now. That's what I will lose. It will not affect my available. I don't know if you are getting something here. It will not affect my available. It will not affect because I isolated. I'm using isolated margin mode.
Okay.
So I've isolated
Please,
3 point.
Coach.
Okay.
Coach, just a quick one to follow up what you just said.
Okay.
Is it not possible to just use 3.74 directly instead of doing that 0.74 cent before adding 3?
Good. I like that. Let's use your method now. Let's try what you just said now. I'll close this trade. I want you to see something. And we are using isolated now. You say we should use 3 point what?
The 3.74, right? Yeah, 3.74.
Yes, 3.74. Okay.
You go back.
Okay, let's use. Yes, 3.7 for now. I'm shorting this market. Watch. Not bad. Look at my risk level. Now, what I just did now has nothing. I've not serviced my liquidation. Look at liquidation is still there. Look at the entry point. So you've not serviced liquidation. This is what you're trading with as a margin. So if the market hits here, you lose 3.7. But do you know that if I want to now adjust, because adjusting liquidation is you want to adjust this liquidation, is too close to the market. And because of your risk level, your risk is too high. You want to reduce your risk. You need to service this margin with extra fund. I see it now. You need extra fund to service this margin. Else, it can hit. So you still need to go back again. Now, if I want to add now, you see, I will tamper with the many balance I have here now. So if I use $5 now, for example, to service my margin maximum, I'm using the $5.8 maximum. You see that it has increased my liquidation price now from the market price. I see it now. So if anything happens to this, I will lose 9.31. So there is necessary for you to service your margin if you're using isolated. So if you're entering isolated, don't enter with huge amount first. Enter with what you want to trade with, which is the 3% first. This is what I'm trading. But now let me now use many balance to service liquidation. So if you use everything to enter, remember you've not serviced liquidation, so you are still taking risk. I see it now. So whether I know why I use 0.74 is because I will still need to service my margin. So as it is now, this $9.31 I'm using now is not what I'm trading with. It's not like that's my current. My main margin is that 3.74. So the other one, the $5.7 is to service liquidation. So if I lose, I will lose this $9.31 all at once. Are you seeing it now? So there's need for you to service liquidation. That is the essence why I first of all did my calculation. Okay, I have $9. I've split it into two already. Now inside the 3.4 something. Okay, I want to use 3% out of the 3 to enter, then use it down to service margin. That means this one is meant for this coin. You don't need to push in money. Even if the market is going against you, you've already serviced this coin. This 3 point something dollar is meant for lever. So you don't have any issue with it. It will not affect your available. But it is now, we don't have any available balance again in our wallet. So only one coin is taking everything. So it's even better I use cross, because if you're using cross, it's better I use cross than using all the coin like this. You understand? So I'm going to close. That is just what this means. Isolated. You're isolating from the available. If anything happens to your trade, it will only affect the isolated. It will not affect your available.
Hello, boss. Please, I hope you are recording this thing, please.
Okay. Yeah, I'm sure it's recording it. I'm sure this all these are on a record. Yeah. So now that is just what it is. So you isolate from the available margin, so you don't lose your capital, so you don't lose the available you have there. So, but I barely trade isolated. I barely trade isolated. That's just the fact. The only time I trade isolated is when I have like 3-4 signals and I look at my available balance. Okay, this value. Okay, let me apportion it to each of these signals. That is where I use isolated. So if any signal do well, fine. If it doesn't do well, fine. Okay, so it's there. If this coin actually doing well, it's actually doing well, I'm making profit, I can go back to this margin and remove my $5 margin back. Let's say $5 margin. You select remove here. There's option for you to remove here. There's option for you to remove here. Let me go to remove. Sorry. Okay, let me go back to this margin. Now you go to the remove section, you select remove. I want to remove the $5 indicated there. Okay, if I remove, my liquidation will be at 0.19. I say confirm. So I've removed it back. I seen it now. I see I've little of it, but that's not everything I removed. So I have $5 removed. So if anything happens, like if the market flips the other way around, I will only lose $4.3. But I've removed. So as you're making profit, all the profits you're making will just be in the margin. You can be taking out those profit from the margin too. It's possible to take profit from the margin and you see remain in the market. They're isolated. So I'm going to close this trade now. And they will not try that of the cross. Now that I've removed my $5 back, you see that my risk level has gone up a bit. But when it was there, it was around 8.
How do we take profit from the margin, please?
Okay, I did take profit from the margin. Now I actually added $5 there, $5 point something there to this margin before. Now, and I removed $5. Now, if I go back to this place now, I can still remove some fund. If I click on maximum, I can still take 0.88 out. So I've taken 0.85 can go. Let's see. Okay, I've removed 0.85. You see now, so the more you keep any more, the more you can be taking up margin, little margin from there. But you cannot take to everything totally to go back to your default margin, which is 3 points something. I seen it now. So as you're making profit, you are reducing. As you're taking margin, you are reducing this lot size. This size will be reducing. So just take out what you use in servicing the margin and leave it. Once you close the trade, you see your profit and loss. Thank God you are seeing your profit and loss here. So you see your profit here, and that's all. So just take away the margin you set, then you leave the rest to keep running. So now I've taken out some fraction, my risk is increasing. So you need margin to service this risk. Okay, and there's what they call zero liquidation. Zero liquidation means except they rock the market, except the developer decide to take liquidity from the coin, you will not get liquidated. We call it zero liquidation. It's a trick. Okay, I will only show us that one in the advanced group, how to apply zero liquidation, where you can go and sleep, forget your trade, and you come back and you see you will not get liquidated. So we call it zero liquidation strategy. So I choose not to drop it here. I will drop it in the normal advanced class for the premium members and all that. So that's for the zero liquidation. So now you've seen how to use the isolated. Now let's now go to the cross. Okay, I don't apply stop loss here because I will talk about the stop loss once and for all. So I'm going to close this trade now. I'm closing this trade. Good. Now I've closed the trade now. Let's now try cross margin now. You see the difference between the cross and isolated. Let's say now this $9.59. I want to use it to trade only lever now. Now that's where I now apply the 5% rule. The 5% of this $9 is still around 4 point something. So let's say 0.4 cents. So I'm going to use let's say this 67 cents. Okay, that's what I want to use. That is my 5%, for example, my 5% of this available now. If I click on short, automatically now, if you look at this other section now, you see that it doesn't have anything like plus to add margin here. What this is trying to let you know that is now that I've set 0.66 to trade my coin now, the remaining available here now here, these ones you're seeing here, will automatically serve as my liquidation. They will now work as your liquidation now. Are you seeing the difference between cross and isolated? I'm not isolating it, I'm trading with everything. So that means if this market price now hit 0.003, I will lose not just this 66 cents, I will lose everything in my wallet, including this $8.90. I will lose it. So that is when between isolated and cross. So but I use cross because cross will help me. I'll look at my liquidation is very far and it will reduce your risk very, very well. Look at my risk level. It's 2.7. I can go and sleep. Even if the market want to flip, I can go back, travel out and come back with that stop loss and it will not liquidate me because I know this coin. For this coin to hit 0.003, you're talking about close to the next bull run. It's very far. If you look at the charts, very, very well. It's far. 0.03 is not here. We'll keep going down. By the time we look at the chart, let's look for 0.03. It's somewhere all time high. In fact, you hardly see 0.0. So for you to see 0.03, it's 0.001. We are still at 0.001. So it's like the next bull run. That's why you see 0.03. The all time high of this coin here now is never here. Even if I'm using 1 day chart, you hardly see 0.003. So for this coin to come to 0.03, I don't see the possibility. From the beginning of future market, this contract, did you see 0.03 as all time high? No. The all time high we've been seeing here is I think around 0.002. And I think it should be either during bull season also, or maybe last year. So if you look at all these things, for this coin to get to 0.003, I don't think it's easier. It's to just get there now. So that's just one thing about cross. So sometimes I use cross and I'll tell you, okay, this money I have here is meant for this trade. I'll just leave it. So if you want to trade multiple coins, that's when you use isolated, you segment it. Okay, you apportion some lot size, some amount for a particular coin, and you service margin to handle liquidity. You service margin to handle liquidity of each of the fund. So that's why I started with 0. Is it 7 cents or 4 cents, 0.3 cents? They are now added $3 to service margin. I know that I've done that part. I can still trade another coin with either 0.something cent and I'll still service margin. So now I've entered this trade with 0.66 cents. Now the money available now is working or is serving or servicing my margin. Sorry, my liquidation price. So I can relax. My risk is very low. This is a perfect risk. If this coin starts going, I start seeing more profit than my risk.
Question, please.
Okay, sir.
All right. Okay. Thank you very much. It's been an amazing presentation. So my question is, as a new beginner in this, what do you advise? Like, are we supposed to use the cross or isolated? Like,
Okay.
and if you drop a signal, is there a provision where you say, okay, for this trade, please use cross or use
Yes, sometimes I do that. Yes, sometimes I drop, you see cross, sometimes I drop isolated. Now, but the best way, sometimes this information it's you that you are the owner of your money. This is what I normally do. I tell people to do. If you have $200 apps, all you have in your wallet, and you don't want the $200, you can isolate it. You can use cross, but what it is, don't move all the money to your future wallet. You can move just $100 and leave $100 in your spot. And so this $100, I'm using it as isolation. As long as you isolated it from the old, don't use all your capital to trade in futures. If you have $1,000 in your Binance wallet, don't move the $1,000 to your futures. You can move maybe $200 and leave the other $800 in your normal spot. Now you know this $200 is my future capital, my future wallet capital, and I want to trade 1 or 2 coins. Use cross. Use 5% of it. So if you are trading 2 different coins and you want to use coins, use 5%. You have, let's say, $200 now. 5% of $200 is around I think should be around maybe around $10 or so. Abi? Yeah, because 100% is $10. And $100 10% is $10. Now 200% is supposed to be $20, which is 10. Now 5% of $200 is $10. Are you getting it now? Yes, 5% of $200 is $10. Now you are using $10 to trade on top of $200 worth of this thing. It's not bad. Are you seeing it now? It's not bad. You know that at the end of that trade, you end up getting, if you're using 20x, you end up getting extra $20 or $15 and $20 or $18 once you hit 100%. It's not bad from a single trade. Imagine you now traded four trades a day, 4 different assets a day. You multiply $20 times 4. You've gotten $80. Are you seeing it now? A single trade 100%, you're using $10 to trade. You've gotten $10 times 4, $40. Are you seeing it now? So you isolate, use 5%. 5% of your margin is okay. So if you have $10 now in your future wallet, I want to use 5% of 10, which is around 50 cents. At the end of the day, you end up getting 50 cents. You look at the money, it's small. So that's why the future is about money. If you don't have enough money, you just be getting something that is tangible. You think this thing is small. It might look small, but the same 100% is what somebody that is having $2,000 worth of portfolio is making. Maybe $200. You're making 5. It's still the same thing. It's just because your funding, your available balance is smaller, but we are all sharing the same percentage. So it's just your funding. So if you have $200 in your future wallet, you use 5% to trade a single token, no problem. Your risk level will just be like this, 2% risk level. You will not panic. But if you have $200 and you are putting, like say, $40 because you want to make more, your risk level will increase. I seen it now. So use 3 to 5% of your portfolio to trade a particular asset. So you have $200 and you want to trade 2 different coins. That means you are splitting it to now $100 for one coin, $100 for one coin. So out of $100, you put in 5%, which is around $5. The other 100%, 5. That's how you do it. So then you use cross, no problem. You can use cross. So me, I barely use isolated. If I have $100 in my wallet or $200, I don't still use isolated. I know what I will trade on the particular coin. I leave it on cross. My cross will service all my 4-5 trades. If I have sometimes I found $5,000 and I want to trade 3 different coins, the available will service all my trade. I know what I'm trading with. I'm not going to use big fund when I know that my available is small. So my available should be able to cover all the should cover liquidation price of 3 or 4 assets I'm trading. So I use cross. I don't know why the last time it's isolated. I use it now. So I just wanted to see the difference isolated. So if I blow my account, it's because I'm using cross. If I blow my account, it's because I'm using isolated and I say I'm available. So I can't remember the last time I got liquidated and I blew my account. I can't remember. I think it should be either last year or so. So I've been using cross and I know what I apportion on each apportion to each of these trade. So it's okay. Or just maintain that rule of 3 to 5%. Whether you're using cross of isolated, use 3 to 5% of your trading. If you're a big greedy, sometimes I even use 10. I'm not going to use 10. You can use 10%, good and fine. If the market is going well, you even regret that you didn't even use high percent. Sometimes it will be going that direction, and sometimes I will just use even 50% of my to trade that coin. I'll make money. That if I'm sure that coin has lost volatility and momentum, I'll trade it, but it's very, very risky. I'm not advising you to do the same thing. You understand? So that's what it means. So 3 to 5% is the standard rule for trading futures. So you have rest of mind. Okay. So I don't know if I've answered your question, sir.
Yes. It's clear. Thank you very much.
Okay.
I want to ask.
Okay, sir. Welcome, sir.
In terms of trading full time, what do you advise?
Okay, full time as in how? Long time or short time, or you want to become a full-time trader?
Full-time trader, kind of, maybe that is your profession. You don't have any other distraction. You just want to focus on trading.
Okay, now, like someone like me now, I'm a full-time trader. So I don't have any other distraction. What I do is this: I know how I started. And if I should start playing the table where I started feature with maybe $30 and I grew it to almost large thousands of dollars in portfolio, it was during bull season. I know what I gained. Future is if I say future is very sweet, people will like, what is sweet in future that you're talking about? Yes, because I've been there for years and I've seen it. So now the only thing is you must learn. I lost to, if I show you my profit and loss years back, you see thousands of dollars I've lost. And if you see my profit, you're like, no wonder you're seeing future because I've gained a lot. Now I've learned to discipline. I was talking about things that make you lose, why you lose, and it's greed. If you can maintain your greed, you'll be on future, you'll be making money on future. So for you to become a future trader, like a full-time trader, then you must know this technical analysis and fundamental. I will show you, if you want us, I will show you how to do fundamental analysis, which is very, very interesting. I'm telling you, the technical analysis, you don't need to know the old charts because nobody knows it. Or when it comes to chart, you see somebody chart that is contradicting your own chart. I'll be like, hi, but fundamental doesn't contradict. That's why I so much cherish fundamental. I mix it. I'll just do a little of the technical, then fundamental. I'll start looking for news, looking for something to back up that trade. Why is this trade going up? Why is it going down? What is the mechanism? What is causing it? Once you know the cause of a coin, either going up or going down, somebody is using technical analysis, you make money on the person. I tell people the truth. So you want to take it as a full-time thing, you learn how to, the technical analysis, price movement, those indicators that shows that this coin is going to go up, going to go down. And that once you know that, that's where you can relax. Then you start with the capital. If you're starting with $1,000, for example, now if you're starting future trading with $1,000, me, I will tell you that $1,000 now, me as a person, It's based on your greed level. I'm just giving you what they call management now. Some person will be like, oh, I have $1,000 now. I'll be putting 10% is $100, right? 10% $100. Once you do 100%, you've gotten $100 for a single trade. You're making $100 for a single trade. But if you give me $1,000 to trade, I will not put $100, 10%. I will not do that. I will not even put $50, which is 5%. People be like, what? So you don't want to make money? Who told them to make money? They know that the speed in which you want to make money is the same speed in which you want to lose that money. That's the leveraging. We talked about the leveraging. So if I have $1,000 worth of asset, I will just put in. I don't mind. My own person. I'll put maybe $20, which is less than 3%. If I put $20 for 1,000%, do you know that at every 100%, I'll get $20. $20 because I'm looking at it in naira is 20,000 naira from a single trade, and you trade 4 times in a day. You are getting $80 steady. Your risk level will be very, very low. That's full time. You set an achievable target. What they call achievable target. All targets are there, but not all target can be achieved. You are looking for target 5. You might not get target 5, but target 2, target 3 is achievable. Set a target there. So at 1,000, you are already $1,000 worth of portfolio. What you should trade it, I'm telling you the truth. If you want to become a profitable trader, don't even look at the rule of 5% to 3%. I will not put $100, which is 10%. I will not even put $50, which is 5%. I'll put 30 or 2%, which is around $20. And I know what I'm looking for. Just like if you lose $20 from 1,000%, you will not feel it. Just if you get $20 from 1,000, you know that you've gained something.
Yeah.
Hello, can you hear me, sir?
Yeah. Thank you very much. Yes.
Hello.
Yes.
Yeah, we can hear you. You're making sense.
If you gain $20, you gain something. But if you lose $20, it will be as if you did not lose anything because you have fat wallet. I see it now. That is one sweet thing about future. Don't look at that 5%, 3%. See, I tell people that if you don't come with $10, it's good. You can start with use those ones to learn how the market works. Maybe $200. But if you have fat wallet, you know that we know people that are making $1,000. That portfolio, go and check it. I belong to a group where I subscribe. How much? I think $500 every month. There as the last 2 years. You know that I, as the only Nigerian person, when I started 2 years ago, when I took it serious 2 years ago, I'll be dropping my losses of $200, $300, and I'll be seeing people dropping losses of $5,000, $10,000, $40,000. I'll be like, wow, let me even keep my mouth shut. I was even thinking I'm losing. Someone losing and if you see their profit, $40,000, $30,000, what do you think? How much do you think they have in their portfolio? Most people have $100,000 worth of portfolio, $50,000 worth of portfolio. They're making money. So, and they're applying these rules. So in this market, if you don't want to blow your account, use that 3 to 5% or below 3 to 5% to trade. You make money. And you know that if you're making $20 and you're having $1,000 worth of this thing, it's not bad. That's how you build it. And that's the least you can make on a single trade. $20 is the least you can make. So you know what I say? Because if the market flips well, goes well, most of the signals, most of my trade, if not now that I just dropped because of today, I don't want us to really see, because I'm the person that I'm a long-term trader. I can trade, and before I will close that trade, you'll be seeing 500%, 1,000%, 800%. So imagine you 100%, you're getting $20. Multiply it by, let's say you are getting 900%. You know how much you make for one single trade? You got 900%, $20. It's something huge. So now, if you now wait for 900% losses, do you know what you've lost? You've lost something huge. So you put in, if you have fat wallet, that's where you should be able to now manage that greed level. Because I have fat wallet, I will not want to blow it. A day trader, if you're making $20 on a daily basis, my brother, is 20,000 naira. It's not small in Nigerian currency. From a single trade, and most times we drop to like 4 signals in a day. Imagine not trade for $40 in a day. It's something. And you don't trade every day. You trade at least 5 times in a day. So if you trade 5 times in a day, one day could be maybe you lose one day. 3 days you win 3 days. It's a plus on your side. If you keep on doing like that, that's how you grow your portfolio. You are making something tangible, and that's a full-time job. And when you now get to that December 20th, or maybe from that December period, you now want to trade longer time, you're not putting that same $20 trading. If you put $20, don't call, I call ETC, Ethereum Classic. If you put your $20 in Ethereum Classic alone, because I've looked at a coin that you can trade, and that coin, when that boost season, your $20 can give you nothing less than $15,000. If that can hit all-time high, yes. Because I know the leverage I'll take, you can even make almost $10,000 to $15,000 with $20 in futures. You can make $20,000. You can make $10,000. So you're looking at this small because your percentage will be reading maybe 40,000% in the next boost season. There's money in futures. But not with $10, because with $10 now you want to not get $20, they will blow you, just take it from you, you lose it. Because the 50 cents will not be enough. You'll be like, how will I now stay for 1 day and I'm any 50 cents? You'll be discouraged. You'll feel discouraged. Where are you going to grow 50 cents to $2? you say even your data, the data you're using to trade your data you're using to trade, you will not even be able to get the trader with money for the data. So those are the things that we'll look into. Coming to future, at least if you have $200, even if you have $200 in your portfolio, you know that from a single trade, without greed, you can be making at least $10, $5 to $10 from a single trade. If that coin goes directly, you make $10 from a single trade. So 10 times 4 trade, you've gotten $40. If you have $200 of portfolio, now if you have $200 now, 10% of $200 is $20. I will not tell you to put $20 if you want to take it as a full-time job. I will not even tell you to put $10, which is 5%. I will tell you to put $5. That is me. Less than that amount, so that you see your risk. If you lose $5, you know $5, you don't miss it. And if you use $5 to get $10, 200, because 200%, most of my signals, the least you get sometimes depends 200%. So 200%, that means you're getting $10 from a single trade. Multiply it times 4, $40 in a day. It's something. With $200 worth of portfolio. I see it now, but don't think you want to use $10 worth of portfolio to make $10. You lose, you blow your account. So as a full-time trader, you come in, you enter, but make sure you understand this, know how to use stop loss. If you know this stocks very, very well, you know the basic tech analysis, I know more fundamental analysis, you are good to go. You remain in the trade for years. I know people are started with more than 15 of them, just few of us, sir.
Sorry, not you.
Okay, so that just is for those of you that want to take this as a full-time job. Make sure you have good fund and you understand this very well. Once you understand this fundamental and you have good fund, you are good to go. You are good to go. You make money from future trading. So any other questions, sir? Do you have any other question?
Okay.
Do you have any other question?
The only question is, can we use these previous signals sent earlier today to just, explain the details in this, how the signal comes in, how it is imputed and all that? Can you just use any of them to just...
That is exactly what I'm doing before I attended to this question. Now, we entered liver. Now, if you look at my screen now, okay, although I entered using the current market price, because the current market price here is higher than the entry point I gave us. So if we use the entry point now, we'll be on losses. Do you understand? So I'm using the current market price to trade this coin. So this is where you enter. If you're using limit order now, and I say enter a coin at 0.0017 something, you just enter the information here. Now I said something about stop and take profit and stop loss. When entering a coin at current market price, sometimes don't just put the stop loss direct. You understand? Because you don't know okay, can you even put the stop loss? Then later go and adjust it. Yes, I like adjusting my stop loss, because you can put stop loss here, and the stop loss you're entering, you look at your available or what you're trading with might be closer to your entry point, so you can adjust your stop loss. So me as a person, I don't really put stop loss. The only time I put stop loss on a trade is if I know it's a long time, like now I want to trade this corner from December, I can do my December settings now, put my take profit and stop loss and go and leave it. If I travel out, once it triggers my take profit and stop loss, trigger my entry point, it will pick the trade for me. Are you getting it? But since we are all doing more of daily trading, okay, scalping and all that, so you can just enter. Once it triggers your take profit, once it enters, it triggers your contract. You can go and adjust the stop loss. So, but at first you can put in your stop loss based on the signal. If they say put your stop loss at 0.007, you can put your 0.007 stop loss. That is take profit. Let's say I'll take profit at 0.07, then I'll stop loss at 0.0019. These are stop loss. Now, and I'm trading this coin. Once I set this, let me cancel this running trade. We don't need this running trade. For the sake of this question you just asked, that's why I'm doing this now. This is our information. The information you got from the signal, you enter it like this: take profit, stop loss. Okay, not stop loss first, before take profit. The first section is take profit, the second section is stop loss. Once you enter the information, you put in your limit order, then you click on what? On sell. If you sell, you're selling. If it is long, make sure you're selecting long. You click on buy. Okay. This buy means long, okay? If you are shorting, this sell means short. So depending on the signal, so this lever, we are expected to short the coin, so I'm using short. But right now, I'm not going to use limit order. I'm going to use current market price, okay, which is CMP. The current market price is this current market price I'm trading with. I'll adjust my cost, and I want to use 86 cents, for example. I'll click on sell short. Okay, now to take profit, stop loss price, now let me set my take profit now. Most of us are seeing this error. Why you're seeing this error is because your take profit and stop loss information is not accurate. So my take profit is at 0.00 0.0017. Okay, then my stop loss is at 0.0019. Then if I click on short, it's trigger. Now it has created the position for me. Okay, now if I come to this open order, you see your stop loss and your take profit settings. But each time I do this, sometimes I cancel this to do it manually. Okay, let me cancel to do it manually. Cancel all. Now I've canceled all the position stop loss and all that. So I see I have the trade running. Now, how do I manually set my stop loss and take profit? Now I will also explain is a method there, a strategy here. Now, let's say this is our trade now. We want to set our stop loss based on the information we have. The trade is running now. That's when you use this stop loss button here. Okay, I'll touch this stop loss and take profit button. Now that will not allow me explain this first section, but let me just do it so that I know some persons are asking questions like, how do I take some profit and still remain in that trade? That's what I want to do now. You want to take some profit and still remain in that trade. Now look at something here. This will make me explain this take profit section and stop loss section. And we also have positions take profit and position stop loss. Before I explain this, let me show you something. Look at this list now. I used 0.85 cents, okay, to buy lever of 9,421 units. That's the size, the lot size of this 0.85 cent now because of my leverage. Now, if I come to this stop loss now, and I want to set stop loss, I want to take some percentage and remain. Now, I will not trigger price. Okay, once this market price hit 0.0018, for example, 0.018 now, that the market should take away. See, look at the total loss size I have, 9,421. I see it now. Now, if I adjust this gauge now, to 100% and I confirm, that means it will close this trade, close it completely. It's like the normal stop loss we are using, it will close it and nothing will be left to trade with. So I can use this lever to adjust. Okay, now once you get to that price, let it close 22%. I see it now. Now 22%, that means from that 9,000 for something quantity we have, 2,000 will be taken out. So my loss size will reduce. From 9,000, we take 2,000, it remains 7,000 plus. So now, and it will close just how many percent? 22% of it will close. If I click confirm, now if the market hits 0.008, it will close some profit, to close some position, give me some profit, and this is the profit I'll get. The expected profit you get is 0.03 cents. When this market closes at 22%, when it triggers at 22%, you will go with 0.3 cents. I seen it now. Okay, if you say, okay, you want to take 50% of it, 50% of it is you get 8 cents. It will close, and you still remain in that trade. So you can go and set your take profit target on profit at 0.072. I seen it now. Once it's 0.07, okay, 172, sorry, 0.017. Now at 25%, you take 25 cents. Now your target 2, you can put target 2 at 0.06, and maybe the remaining 25% again, or 50%, you take $1. So that's how you can be taking. But as you're doing that, the only which you're supposed to aim up profit will reduce because you are reducing the lot size. The quantity of the asset will now reduce. So it's better you either use this other one and close once, okay, or you use this other method, close position. Now, once you click on close position, you can still select. I see now lot size here too. You can adjust. You want to remain in the trade. I'm showing you how to close a position, to close and take some profit and still remain in that trade. So if I'm taking 50% of this token now, based on the current market price, you will see the estimated profit or losses I will get here. Okay, so I didn't do that because I did not indicate anything here. So I'm using current market price. If you want to use limit, you can use limit and set the same limit. So this information is the same thing as the stop loss one I was showing you before. I seen it now. So you just indicate the price at what price you want to close the market. So if I'm closing the market at 0.17, for example, now I don't want to close all. I can make it 50%. And so I'm closing 50%. So if I click on confirm, once the market reaches 0.0017, it will trigger close position and it will close 50%. That's 4,710 quantity of that token will be closed, and I will go with 0.55%. If I click on confirm now, that's what's going to happen. You see, I'm still in the trade, but it will not keep a stop loss here for me. I see a stop loss, and once you hit that particular limit I put, it will close 50%, and I'll still remain in the market. I'll still have 50% to still get at the end of the market. That is what close position means. This other close position I just did now. what I just did now. So I'll go and cancel it and explain the stop loss. So it will appear here as stop loss. Okay. It will appear as stop loss. So now it's showing limit buy. That's just the same thing. This is the settings. So I'm going to close it and use stop loss instead. So I like using stop loss. So let's go back to our stop loss. So like I said, what I just did now using the close position is the same thing as this, okay, but in a different method. So you can indicate your trigger price and indicate the percentage you want to take out. Then you confirm. Once it hits this trigger price, it will close the percentage, the amount of token you want it to close. But this is the one we'll be using. This one is what they call position stop loss. If the market hits any of this trigger price you indicated here, it will close that trade for you automatically. So you might not be online, maybe you might be sleeping. When the market hits your take profit, it will hit your take profit and to close the trade for you. You're on profit. And if the market flips the other way around, if you hit any of the trigger prices specified here, it will trigger that loss price, then to close the trade for you. So this one is actually good. That's why we talk about the mechanism, stop loss and take profit. These two mechanisms are very, very important. You don't joke with it. So based on the signal we have now, the take profit, maybe target 5 should be around that. I don't know, I'm just guessing 0.00165, for example. This is your target 5 now. So your estimated profit now will be 1.58. You see here it's showing the estimated profit and loss. But if you should enter the take profit and stop loss when setting up your trade, you will not see your estimated. It won't show estimated price. I seen it now. So the stop loss, you can put your stop loss 0.00185. So this is your estimated losses now, 0.30. So now what this thing implies is if the market get to 0.3, so if the market get to 0.185, you lose 0.3 cents. That's 30 cents. Then if the market hits 0.165, you gain 1.58. And at each point the market hit any of these specified information, it will close that trade for you. It will trigger close position for you. So now this other information now here, this shows your entry price. This is when I enter the market. This is the entry price of the market. I enter at 0.8180, and this is the current price, 0.8102. So you can adjust it. So make sure that your stop loss is above your entry price. See, my stop loss is around 0.185 and my entry price is 0.181. So that means if the market flips and start going the other way around, hit this stop loss, I will lose 0.3. So now let's assume this market is going well with us, okay? And our first target is let's say maybe we hit our first target, which is around 165 now. Do you know that you don't leave once you hit your first, okay, your second target, I want to remain in that trade. Okay, at all, it's still 9 bad pass. Now you hit your second target. Now you don't want to close the trade. What you should do is don't leave your stop loss where it is, because if the market flips back, you will not be like you are starting again, because you'll not be recording losses when you had chances to take up profit. So what you should do is now go back to adjust your stop loss to target 1. So target 1 now should be your new stop loss entry. I don't know if you're getting it. This is a strategy now to make money. If you are already seeing target 2 profit, let's say target 2 is around 100% and target 1 is 50%, and you're 100%, go back to your stop loss and adjust your stop loss to target 1 entry. You understand? That stop loss, that take profit is going to let that place now be your stop loss. In case the market flips, you know that you are going with target 1 entry, winning profit. I see it now. When it hits target 4, adjust your stop loss to target 3, winning. I see it now. This time around, all these things are below your entry points now. Your stop loss will not be in any of the entry position we gave you. So until you hit the last target 5, if you hit target 5, you adjust the stop loss to target 4. Now, if the market keep on going your direction and it has gone below target 5, you can take your stop loss to target 5 and just keep enjoying the journey, the profit, and that's how crypto is. So I don't just, once I make profit, I adjust my stop loss. I make profit, I adjust my stop loss. Even if it doesn't go to your entry point, but make sure that you are adjusting your stop loss. As you're adjusting it, you're reducing your losses. So your losses can start, will start becoming profit, because you are making profit. You are adjusting your stop loss to your, to other profit zone and all that. People know it. You are making profit. Even if the market flips, you go home with something. Now for you to just leave it there, and you now regret that, oh, I would have taken profit to when you hit the first target, now to go back to entry point and you'll be recording losses. So stop loss, adjusting it at every point in time when you're making profit, be reducing your losses until you apply a stop loss to the profit zone and take money from it. So there's money there. So make use of the stop loss and take profit. And take profit now, for example, if you can see second profit and maybe your profit is an top profit, you can adjust your TP to target 5 again. when it target 4, because if the market hits any of your take profit or stop loss, it will close that position. And because you don't want to close position and you're on profit, you can be adjusting your take profit too. As you're adjusting your stop loss closer, adjust the take profit closer, so you'll be milking more in the space. So that's just the technical aspect of it, the use of this stop loss and take profit.
Hello, sir.
Okay, I can hear you,
Yes,
sir.
talking about target 1 to 3, depending on the trade. Are you going to open different position or only one position?
Only one position. That's why if you look at the presentation, you'll say always stay in your trade if you know you want to monitor your trade. Now, let's say target 1 now is, let me put it this way now. You enter a trade at $10. Are you getting it now? Your stop loss is at, if the market goes to $11, you will be losing. Are you seeing it now? And you are trading short. The market price is around $10. And target 1 profit is around let's say $8. Are you getting it? Target 2 profit is around $6. Target 2 profit is around $4. Target 4 profit is around $2. What you do is this now. Since you enter that trade at $10, what target 1, which is around $8 profit. What are you, your stop loss that is around $11, bring it to your end, which is $8, which is around $10. I see it now. Now that's target 1. Once you hit target 2, which is let's say $6, adjust your stop loss now to target 1, which is around $8. Are you seeing it now? Now, but if you allow the market hit that top profit exactly at that target 6, it will close that position, and that's what you're going with. So what I do is, if I know that this market is going down and it's approaching my take profit, I will not adjust my take profit from 6 to like 5 or 4. Sorry, to target 4. So that as it's going down, I'll be adjusting my stop loss. My stop loss will not be working as take profit now. Your stop loss will be working as take profit because you're adjusting it. Now, you cannot just see one thing about take profit. That's where it comes in. I don't set take profit most times on my trade. Why? Because if I'm sure this trade is going down, I'll be taking it manually and I'll be adjusting it further because I want to make profit. But if I know that the market is unstable, I will not be actively online. I will just specify the take profit I want. If it is that I want, I will stick it there because I now will not be online to watch the trade. So if the market takes profit 5, it will close my trade. If it doesn't take profit 5, then anywhere I meet the trade, it could be that it's still on take profit 3. So if I feel like I'm okay with 3, I can close the trade. But if you want 5, put that 5. If it doesn't hit that 5, that means maybe hit 4, but because you are not there to take profit or to close the trade, it will rebalance back to even your entry point. So when you watch a trade, put an achievable take profit. Don't put that last take profit because you might not achieve it. Profit 1 to 3 is okay. But if you are monitoring the trade and you get to profit 3 and you have that idea, this thing might hit profit 5, you can remove your take profit and be watching it manually. So if you feel it has touched profit 4, you can close it manually or you put profit 4. So, but you cannot put all this profit at every point in that. Say at profit 1, you take it and you now enter. No. Once the market triggers your profit price, it will close the market. So, but because you don't want it to close and you have that mindset that it might reach that profit, then you do it manually. Be closing it manually, be adjusting your stop loss manually. So that's me. I don't really put the only time I put take profit is when I know I'm not going to watch that trade. I'm not available. I put my take profit and I put my stop loss. When I come back, I know that my trade is doing well. Or if you hit my stop loss, I'm losing just little fraction. And if it hit my take profit, I know I'm gaining something. But if I'm watching it, I don't put my take profit, I'll be watching it, but my stop loss will be there because anything can happen to the market. But the take profit, I'll be watching it, and that's where greed comes in until you make out what you feel like taking and you leave the market. So that's how it works. So be sure, pick any of the take profit of your choice and use it. If you know you're not going to be monitoring the trade, and leave it, let it go to trigger it when you get to that take profit. But if you want to be watching it, you'll be adjusting your take profit. As the market is going your direction, be adjusting it so you make more profit. Because if you hit that take profit, you put it to close the trade. And once you close the trade, don't have that mindset to go back to enter that trade. People make that mistake. This one is going well. Let me enter again. If you enter again, you will lose. You will lose what you gain because you are creating a new position now. Your new position is somebody's take profit. And the market will always reverse sometimes. So when you start reversing, you'll be recording losses. So you've lost position. So if you want to maintain your position, your entry position, then make sure that your take profit and the market price are not too close. Make sure everything's a bit far from each other. I can hold a trade 3-4 days.
Sorry to disturb you. Is Khadija there? Okay, I hope you are getting this part because she's having serious issues at this part and she needed me to explain it. And I told her that it will be taken care of. Khadija, are you there?
Yeah, I understand. I've understood, but I'm still confused on how to place your stop loss, total profit, and take profit and stop loss if it's out of the signal that is given.
Okay. Do you want me to use the signal? Do you want me to use the signal as an example?
No, I think I would
Yes.
go with current price. Go with the current one, just the one we are seeing now. Because if you use the signal,
Okay.
the signal is already given. And how would we do it ourselves in case the signal
Okay.
is out of the signal?
Okay, now we are using this. This is what we actually do. Need the same signal, but the price have changed. The current price of the signal have changed from the signal I dropped in the group. You understand? So we are just using this one, assuming we are using that signal. Now this is the pair we are trading with. Now let's assume our entry price is the same entry price we have in that signal. How do you place your stop loss? Now from that signal, now we have a stop loss in that signal. If the stop loss in that signal is 0.172, you come to this section and put your stop loss at 0. You come to this position stop loss, please take note, position stop loss. You come to the position and set your stop loss at 0.00172. Now, if this is your stop loss, so for example, that's not the stop loss we have there. The stop loss you have there should be either 0.018 or so. So, but because the price have changed now, I'm taking my stop loss to 0.184. So 185. So this is what I'm ready to let go. Your stop loss, when setting your stop loss should be able to give you a negative profit. That's a negative this figure. That means you're losing. But what it should indicate there should be small. You understand? Because you cannot enter this trade at 0.18180 and you now use your entry point as your stop loss. If I use my entry point as stop loss, do you know the implication of it? That means you're just there. The market will just close you out because sometimes this market might go above your entry point. I seen it now before it will now start going your direction. So you don't use your entry point as stop loss when you enter in a trade because it will just close you out. I don't know if you're getting. So your stop loss should be above your entry point. That's why I had to use 0.0185. So this is what I'm ready to lose. Now, this stop loss I'm using now, I've looked at my resistance from the chart and said, okay, this market, before it will reach this place, I think the market must have gone down first before it will flip back to this place. Are you seeing the idea now of stop loss? Before it will hit that stop loss, you believe this market will go your direction. It might even go a bit higher than your entry point to even, let's say 0.883. And you will see, 11 cents, maybe there you start panicking, be like, this might hit my stop loss, I'll now lose 30 cents. Don't worry, it might retrace from here. But if you put your entry point, it will just be taken out of the market. So put stop loss that is far from your entry point. Sometimes my own stop loss when I traded this call was around 0.19. Well, depending on what I was seeing as losses was even bigger than this then. So now you can put it on. You now have the mindset that this market, before the market will hit 0.019, is far. Well, now look at what you lose. Are you seeing it? Now look at what you lose. Are you ready to lose that thing for this trade? You want to gain this? Are you ready to lose $20 because you want to get $50? That's how it should be. So if you're ready to lose $20 just because you are looking for $50, fine, no problem. But if the market starts going in direction, you gain $50 at the end of the day. I think so. Put stop loss according to what you can lose. That's why sometimes putting stop loss when entering a trade, because you're not seeing the amount you are losing, you won't know. Maybe what you're supposed to lose will be bigger than what you have. So that's why once you put it, cancel it and come back and do it manually so that you use your eyes to see what you're about to gain or what you're about to lose. I see it. That's why I prefer entering manual stop loss. Because if you enter using any of those price, it could be that it's closer to the entry price. You'll not be like, how will I lose $20 because I want to get $10? You cancel it and adjust it to what you can afford to lose or what you can afford to gain. So the take profit, sometimes I don't put it. I wait until I feel like this market, if I put it, it depends. But if you know you're not going to monitor the trade, please indicate your take profit so that you go with something. Because sometimes this market might hit target 5, and because you're not there to take profit, it will not go back to entry point. You regret for not taking profit. That's what about the market. So stop loss should be above your entry price, a little bit of what you lose in case it get there, but not, it shouldn't be too close. You understand? Now I tell people that just like you expected to win $10, put $10 losses. You understand? I tell people like, why will I put $10? That's the market for you. Because anything can flip, but the $10 losses now, based on the chart and analysis, we see that this market is not going there. So if it's going towards that place, it's because there's a manipulation or they want to liquidate weaker holders. Those are trading weak, that stop loss is a bit closer. Just like I'm putting 0.19 now, somebody's stop loss might be 0.18, and this market regulator, or maybe this maybe the longest might want to push this market to 0.018 to close those that put in that stop loss at 0.18. So me that put my stop loss on 0.019, I'll still be enjoying. I'll be like, thank God, it did not hit my stop loss. And the market will start going in my direction again. I'll start making profit. That's what it does. So sometimes the market flips to hit people's stop loss. Every resistance is somebody's stop loss. So I don't put my stop loss as a trader. I don't put my stop loss on that resistance level, I go above the resistance to the breaking point, like another uptrend. That's why I put my stop loss. In case it kicks everybody out, I'll still be in the market before it to start going down. That is the idea. That's why I give us stop loss. So if there's a stop loss in any settings we give you, enter it, then cancel it and go and do it manually, so you know what you're expected to lose. If you feel you cannot lose this amount, adjust it to what you can lose. So if you trigger your stop loss and you drop in the area that you lost, we'll tell you sorry, but the stop loss are indicated there. Hello?
Go ahead.
Hello,
Okay.
what of the
So
take profit?
you said?
I said, then what of the take profits? I understand how you, I understand the stop loss now, but what of the take profit? How do you now set it? Let's say how
Now,
you say you set the take profits.
okay. Now the take profit now, based on the signal we have, if we tell you, okay, this coin, you are taking your first take profit. Now, no, we have 5 take profit. Why we made it 5 or 4 or 3 take profit is according to your greed level. Although we know that this coin is going to hit any of those profits. So now in speculation, we speculated that this coin is going to hit the last take profit. Now, if you are a long trader, if you're a trader, you know that I have patience, I can wait for the last this thing. You can set your last take profit to either at 0.0016. Now, if this market go to the last take profit 0.016, whether you're online or not, it will trigger this, it will trigger 0.016 and close that trade for you, and you go home with this with the profit you are seeing on your dashboard. It could be $500, like $1,000, whatever profit you see is what to go with. You are going with, whether you're online or not. That's what the profit means. Now, if it's target 3 you are looking for, target 3 could be 0.068. 68, for example. Target 3 now, if you hit target 3 take profit, you go with 1.30 cents. $1.30 is what you're going with. So that is if you set take profit. Now, but if maybe this market has hit target 1, target 2, target 3, or maybe it's approaching target 3, and you feel like I'm too greedy, I don't want to close this position, you can adjust it to the next target, either 0.065. I seen it now so that you make profit. I seen it, that's how you be adjusting it manually. You can do that manually because of your greed. You can adjust the profit according to your greed until you make out all the take profit. But if the market hits that take profit before you adjust it, it will close the position for you and you go with whatever profit you have. That's what take profit is all about.
Okay, so in a situation whereby you've already, the trade has already passed all the targets, so what should you now do as you take profits?
Now it's very simple. If you do not set take profit figure here and it has touched all the target, you're making profit, you close it manually. But as long as you've entered the take profit figure here, once the market hits any of these, the specified price here, it will take you out with whatever profit you make on that price, which is here. So I use myself as an example. Sometimes I don't put my take profit when I'm already seeing this trade going my direction. I don't put my take profit until I get target 4 or 5. If I get target 4, I will now put my take profit at, I will say my stop loss now. I will now adjust my stop loss to that target 4 as my take profit, so that in case the market want to flip, I will go with that target 4 profit. But if you do not set it, the market might flip back and you go back to beginning again. So always set to take profit. So you go with something achievable take profit. If you have 5 take profit settings there, pick one of them and say this is where your greed want to take you to. If it's take profit 2 settings, put it here. And once market hit take profit, you are out of the trade. Other people might still be in the trade and they'll be showing screenshot. I'm still in the trade, I'm making 500%, and maybe you close at 100%. It's because you choose a profit of your choice, like according to your greed. So if you want to get 500%, then don't put take profit and you'll be watching it. You do that manually. So that's what it means, manually. So me, I do mine sometimes manually, but if I'm doing manually, I must have adjusted my stop loss to a particular take profit in case I'm not there.
Yeah, so I think this thing is based on your personality type. If you know you're the busy type, you don't check trades, your mind is not yet here fully. Use your take profit so that you don't go and come back and you see your people are in green and you are in negative. It's not magic. The market is moving. It's going forward and backward at the same time. So sometimes some people will post profit while you will now post losses on the same trade. It is very possible because you didn't put take profit and you were not monitoring your trade. Am I right, sir?
Yeah, you're right. Yeah. What causes that one is this. Now you enter a trade and you hit your take profit, and you did not, maybe you didn't put take profit and you get to target 5, but because you did not take profit, the market now reverses upward again above your entry point. You'll not be on losses while some people have taken profit already. So take profit helps you very, very well. You know that this lever alone has given so many people profits and people are still closing and entering again. It's just fluctuating up and down, up and down. People are making profit, some are losing. So it's a very nice trade. This coin, By tomorrow, if you watch this coin, if you're in this coin, you start seeing profit. I know that for sure, because by tomorrow it will lose momentum and it will start going down. It will go down. So if you are trading short on this coin tomorrow before 4 p.m., you'll be getting maybe 100 and something percent or 150%. That one is sure, or more. So that's one thing about this trade. So always set your step profit is good. If you're not going to monitor your trade, just set it and leave it. When it triggers that price to close your position, go with whatever the market gives you. But if you want to be greedy enough, don't put your take profit and you manage it. Watch it manually close your trade. If I don't want to use any of these settings now, I want to be watching this trade from morning to night. What I just need to do is I will not set any take profit and stop loss. I'll be watching it. Once I see 500% here, I'll just close my position. That's all. I don't need to, but if I know I'm not going to be online to do all these things manually, I will just set take profit and stop loss. Like in our presentation, these are two mechanisms that helps you manage your risk, manage your loss. Take profit will help you reduce your losses, okay? And also, take profit, stop loss will help you reduce your losses. Why take profit? It helps you take profit when you're not there. It helps you take profit. Your profit can even be some losses. You can take profit as loss as profit too, depending. If you don't want to lose more than $20 and the market is around, you are losing already $5, you can just close that place. You are growing with that profit. That little loss, I know that. It's better than losing $20. So if I'm looking at the market and I know that this market is, I want to lose $5 and this is already approaching $3 and I've checked the chart and the chart is showing that it might hit $5. I'll close that $3 loss. It's better. Don't wait till that $5 because market can change. Now, Bitcoin is supposed to, based on, everybody knows that Bitcoin is going back to $24,000. We all know that. But you don't know when. Maybe before I get to $24,000, it will go to 28 or 30. I seen it now. So because I'm waiting, you see some losses. So take profit, then later look at the market again. At the long run, Bitcoin might hit $24,000 or $23,000 before we approach the next bull run. That's how the market is. So it will always fluctuate. If you don't take profit when you're supposed to take profit, you lose that chances and you not get it again. You start recording losses. So take profit will help you. Take profit when you're not available.
Excuse me, sir, can I ask one last question for me?
No
or like a question, suggestion. Is it possible to have this Zoom like twice in a week? I know it's difficult, but the more we do it together, the more we get clarity. Like the last Zoom, I was kind of like totally lost. You understand? But today, at least I can actually jump into a trade and do one or two things. And I think if we can have it like twice in a week, it will help. This is just suggestion, not like an appeal. Thank you very much.
It's a good thing. In fact, we actually had that intention, that plan, that in mind. And this I want to do it. Now, very soon, we'll be approaching bull season. Next year is halving. Halving is next year. Now, the bull run might come before the halving, might come before the halving or during the halving. They might start the halving, and maybe 2-3 months or 5 months later, that's when you start seeing bull season, bull run. Now, the thing is, there's a time for us to buy. By the time I will get list of coins that will do zoom in and say, this coin, look at this coin now. Let's enter this trade together. It will be like Zoom. Okay, get your phone. Normally, we're supposed to be doing this. There's a signal. You understand? Now, for example, now there's a signal I'm looking at. Okay, I've been doing the analysis since 2 days now. If I see a clear way, we can do that. This particular corner. Okay, there's the entry point. Let's all come online. We want to trade this coin, put your entry price like this and all those things, and we'll set and we'll leave. We can always do that. You understand? But most of those kind of Zoom call will be during that when we're prepared for bull season. These ones are just give us this day. These are scalping. If we want to wait for Zoom meeting for drop the signal, we'll miss entry position. I seen it now. So sometimes we miss entry position if we want to create Zoom meeting before we enter a trade. So that, but there are some trade like long-term trade now. We have long-term trade like IMX. Now that IMX I drop is a long-term trade. We can say I can create a Zoom cloud. Okay, let's enter this trade and set it up. But I don't want to set it up now because the market might still go to that place and flip back. So there's a time where we'll not trade for long term. Once we approach December, please. I'm telling you, like I said, I'm assuring each and everyone that will be millionaires in dollars.
December, everybody just go and gather USDT and keep in your pocket.
Because I have list of coins that do well during bull season. When I started future, the coin that made me that gave me money on future was Solana. Solana was around $31 when I used only $5 just to test futures to trade Solana, and I got almost $300 or $400 on Solana with $5. I traded Solana to Solana entered the all-time high before I closed my position with just $5. I smiled before I started taking other trades. So with $5, I made $300 and something or more.
Wow. Serious.
So order to learn. That's during bull run. So imagine you now have $50 or $30. Now traded IMX that I'm looking at IMX as a coin that will be either $40 or $20. There's some even optimism. There's so many optimism. What they call it? Apto. These are coins that if you keep them, their all-time high of this coin based on how we see bull run is $20-$25, and most of them are less than $1 now. Imagine use $5 to trade a coin that gets to $30 or $40 and using 20x leverage. I don't know how much you're trading with. You're making money. You'll be recording almost 2,000, 3,000%, 5,000%. It's money. So that's our mindset. So what we're just doing, we're just getting to know features and a little $20, $10 we're making, okay, manage it, $5, okay, no problem. $50 a day, no problem. When you start seeing thousands of dollars as profit, you'll be like, wow, so features like this, you'll not be regretting you didn't join features on time. So that's just it. There's money in features. There's money in feature trading.
All right.
Can I ask?
Very much.
I like to find out. Can I go
Okay,
ahead?
sir. Yes, sir.
I want to find out whether we can use PC for this training, because it's good. Some of us are using both, and it's good also that we get used to all these things we are doing on the phone, also on the PC, especially those of us who want to do a kind of a full-time futures traders.
Okay, no problem. Okay, the PC version of this, I don't mind. Maybe before Monday, I'll create how the PC looks, the PC version of it. I'll just create a short, maybe a 10-minute video on how to use PC to enter, how to set stop loss on PC too, and all that. So if I should go, we can't use it on Zoom because some person might not really grab it. Why I'm using phone? Because I know 80% of traders are using phone because it's mobile. You're going anywhere, you want to set. But those I want to take full time, I'll just create. It's very simple. The PC PC interface is very simple. I'll just create the view and explain everything on PC. Then we'll drop the video in the group. So those of you that have PC will load, this that PC view is that. So I will explain it on PC. PC doesn't have any issue. It's very simple. The PC interface is easy too. I will show us the PC. I'll create that one, a separate video, maybe 10 or 15-minute video, and we'll drop it in the group. So those that have PC can actually, okay, this is how the PC interface looks like. Okay, this is how to enter trade on PC and all that. It's that's what we'll do. We'll do that. Yes, sir.
I have a question, sir.
Okay, sir.
Thank you very much for this your lengthy and well explained this thing. I'm sure I'm enjoying it. As if maybe we should stay from here till tomorrow. I want your professional advice. Do some of us are not too know that we are novice to crypto, but there are advices here and there, and as a professional, this is what I want you to advise me. There's people that believe that as you are approaching the bull run, that buy and hold. Why others always say that it's always good you trade it like the way you are training us now. So I want your professional advice so that we know the better way of make good as you are approaching the bull.
Okay, sir. Okay, nice question, sir. Now, I don't just trade features. I'm not just into features. Okay. And before now, 2021, I have so many. If I should go back to my group and I bring out screenshot of posts that made people made money from holding coins. In fact, I made money from holding coins even before I started making money from features. But over time, I now understood because crypto is divided into two parts. I want you to understand how crypto is divided. It's into the trading and the holding. I get it now. You have the future trading, you have the spot trading. That's what it's about. Buy and sell, spot and future. These are the two major aspects of future. The rest, which is liquidity pooling, and maybe provide liquidity and DeFi, NFT. These ones are just other part of crypto. They don't want to take it to what? It's about future trading. Future trading, let me tell us the secret. Future trading is what is actually affecting the market. Market is being regulated by future. Whatever happens in future contract affect the spot. Spot movers don't move the market. Future traders don't move in the market. Like all these bigger boys, all these other enormous and the rest of them, they trade futures. MicroStrategy, they all bought futures. These are the things that is holding crypto. If they dump the market, it affects everybody trading or you holding anything. So future is one thing that is holding the market, like stock exchange. If you trade in forex, that's how it is. That's what the money is. People are putting money not on spot because spot developers might decide to dump on your head, but developers don't come to future to dump because you are leveraging with money. and it's affecting the market. So future are the people moving the market. If you look at where blockchain is so broad, it has the trading part and the holding part. Now the holding part is good. Okay, the only time you hold part is there are some tokens that don't have contract on futures that you cannot trade on futures. You can buy some of those tokens and hold. Like during 2021, 22, so many coins like Samo, most of these, even Shiba. I'm talking about Shiba that was dropped when I got Shiba signal. It was very same. People in that group made, the least person that made money in that group was, I think, $500. The least, which was small, little less than $5. Feg and the rest of even the Samo and the Wolf. These are coins that we just bought. I told them, if you have $5, $10, somebody bought just $20 out of the coin and he gave him $20,000. I mean, Wolf in 2021, $20 gave him $20,000. I'm not exaggerating. I can bring up proof of those because we did that. So there's some coins that you can trade. These ones are newer coins that come in, you hold them, they have so many zeros, but then they cancel 5 or 6 zeros, they're making money. But if you want to now buy project, these are actually, we call them shit coins and all that, but project-based coins, that are coins that you can hold. There are some coins that are not on futures that I can tell you to hold. I have lists of coins that you can hold. You understand? If you're scared, you feel like you don't want to leverage your money in futures, you want to tie it on sports, no problem. You can do that on sports. But what you make in sports, 1x in future, when I talk about 2x, 20, what it means is 1x. Every spot trade is always 1x. 1x is 100%. That means if you buy big when it's $1 and it gets to $2, that means 1x. That's not 1x, 100%. But in future, 20x is 2000%. So the $1 you use, in buying big in futures, if it does 20,000%, you know how much it is? It's $20. Why on spot it will only give you $1 extra, $2? Are you seeing it now, total? So that's the thing about futures. Your leverage is risky if you don't understand it, but if you understand it very well, I showed out how to reduce your risk by servicing margin and liquidation. You have rest of mind. But on spot, there's some tokens you can still buy on spot that are not on futures yet. You can still hold those coins. So in future, without financial advice, there are times you buy, like during the mistake most of us held, and most of us had coins during this bear market, and we forgot to sell where you're supposed to sell. And most of those coins are showing you maybe little dollars now. Maybe you had thousands of dollars then, but now you didn't sell at where you're supposed to sell. In future, it's not like that. Once the market is going down in future, we've seen it, we'll dump it on your head. Spot to start crying. So these are things that happen behind the scene. So if you want to trade, if you don't have enough money to buy enough coin on spot, you can use future to grow money using buying spot. That is the idea. If you have $50 in your wallet and $50, you can only buy 1 or 2 coins on spot. If you buy big with $50 and it does 2x, you get extra $50. But if you use the money and use maybe $10 or $50 to buy futures, you will get more than $50 using buying that big over time. So it's just the way you see it. We have those that don't trade spot. Theirs is just futures. We have those that trade spot because they don't want to take that risk of, okay, my money, maybe the market flips and I get liquidated, I lose them. When they go on spot trading, I know I can also show us maybe over time, the advanced, I will show you how to make money from spot too. I have so many spot signals, so I cannot be dropping both spot and future signal. We have them, we are very good. So we have spot signals too. If you want to base your own on spot, so that, okay, don't want to really, your money will be there. If you are C minus, you're on losses, you just have to wait for the next good season. When market goes, if you make money, you can buy some coin on spot. You have so many coins that you can hold on spot, so you can be the boat. You can trade the boat if you have the money. Yes, you can trade the boat. Myself, I'm trading future so that I can accumulate some coins on spot and keep for long term, 10 years, 2 years, maybe 20 years, 15 years from now. What you make from the future, you can make the money to buy spot. I seen it now. So that's like this. I've been trading futures since last year, and I've been saving money from my future money. I've been buying coins from the profit I make from futures. I've bought so many coins from futures. But if I'm trading spot, spot is all about uptrend. You cannot sell short. You're buying to hold, and if the market is going down, you'll be seeing minus losses. So that is how I'm losing money. I'm making money from futures via losses because I'm trading short. While people are crying on spot, I'm making money from futures, and I'm using it to buy, or I'm saving it as USDT to buy the next bull season. So the boat, you should be the boat trader. I think that one is, you can understand the boat, so that when we are in bear season, people are crying, then you make money in bear season on futures, while spot, because you cannot buy coin from bear market too early. When Bitcoin was dropping from 60,000, anybody that is buying coin, I'm telling you, the person must have exhausted. The money will be like dust. So you don't buy coin when market is going down. You buy it when it has reached the bottom. Then you are putting in the next position. That's why you buy coin for long. So now, when Bitcoin was dropping, I wasn't buying coin. I was trading future. I was trading short until Bitcoin dropped to where it got to. I've made money and I bought. Now I still have coins I will still buy during December, November, and I will hold for long term. Ethereum Classic is a very nice coin to hold. Optimism. There are so many of them. understand that the rest of them, these are project-based coin, not the shit coin that just come today. After they pump, they dump it, they don't have feature. You don't know where they dump it. You buy project-based coin for long term. All this is maybe over time we'll start talking about some of these spot tokens too. Because there's so many ways to make money from the place. This we're talking about future like this. This day I don't want us to even limit on only futures. I don't know if my boss will allow me. We'll still talk about even the sport and other ways you can make money. I just want us to make money from blockchain space entirely. There's money in this space. There's money in this space. So whether you're a sport trader or future trader, it's cool. It's a very nice one. So I don't know, sir. So that's the advice I can give you. So if you want to be the both, it's good you know the both. I trade the both of them. I don't just base on features. There are times I be like, okay, now let me just buy sport and keep. And during bull season, everybody's accumulating money for sports. You can buy and keep for sports. And you still trade features. Maybe on features, you don't trade more than you only trade 3 or 4 assets on features. You don't trade features until you are trading sport because you are trading leverage. This is contract. The price of sport is different from the price on features. Let's take note of this now. The current price of bake maybe might be $2 on sport. That's the actual price. But on future, it might be $1, it might be $5. So and to be going down, to be going opposite the main price direction. So that one is a contract. It's like it's like stock. You are trading something different. So trade normal sports, or they want to trade pictures, you trade pictures too. Trade pictures too. So the both of them, if you're trading the both, it's not bad. Not bad, sir.
Thank you so very much. I really appreciate this, sir. If you have one wife before, I just pray God should give you money to add another one, sir.
So thank you, sir.
All right.
Okay, sir.
I think that was wonderful. If you are still on this call, you are active and you appreciate, I want you to tell Don VIP in the chat box, tell him thank you, tell him something nice in the chat box. If you got value, this is totally free, but you need to understand one thing. Nothing is free in life. Somebody is paying the price. So I want you to appreciate Don VIP in the chat box. Send him an emoji, send him thank you, send him a fire emoji, tell him value, appreciate him, tell him that you got value so that he will be, encouraged to do this again and again for you guys, right? VIP is awesome. I hope you're seeing the messages. Thank you very much.
Thank you very much, sir.
This shows that you are consistent.
You're welcome.
You are consistent and you are true to the task. You see, there's nothing good that comes easy. And that's one thing I want to tell every crypto enthusiast. It is very dangerous for you not to find yourself in a community when a bull market is coming. I'll repeat that. It is very, very dangerous for you not to be in a community of experts when a bull market is coming, because just one coin can change your life. I missed out on Shiba. I was told that time there is Shiba, I should buy this coin. I didn't buy it. I have friends that are everywhere around the world now as I speak. They made hundreds of thousands of dollars. And I'm not just exaggerating. I know somebody that made $700,000 from Cake. Cake is the name of a coin, right? I'm probably investing $100. Yeah. I know someone that made $600,000 on Shiba Inu. That person invested about $50. What we need to do this period now is to gather money, gather USDT, have some stock, some cash kept somewhere. If possible, let it already be in USDT, waiting for that signal. It might not just be the first one, it might not be the second one, but I can tell you I am going to make massive profit and I'm going to paste it in this group where I have $1 million in my wallet and several wallets, millions of dollars are sitting there. So it is important that you use a group that where signals, where opportunities are being pasted so that you can use it to elevate yourself. And it's not even because information is power. If you don't have information, don't have information, you're in problem. If you have information and you don't have money, you are still in problem. So you need to get the two, information and money together, and wait for your opportunity so that when it comes, you are 100% ready. Thank you, everybody, for joining this call. Very soon, subscription is going to start. It's going to start in the month of October. I want you to utilize the signal, gather enough money, because the group is only strictly going to be a paid group very, very soon. I don't know if there's any other question. Anybody wants to ask any question again? Do we close this meeting?
Question.
Okay, please hit us. What's your name before you?
My name is Victor Nwokolo Chibueze.
All right, please.
So Firstly, I think it's imperative I say a very big thank you to the convener of this meeting and to Don VIP who has done justice. I'm totally new to the crypto space, even though I have to some level an appreciable knowledge as per trading with regards to Forex. But crypto is something that I'm new to, and I'm very, very much open to learn and to begin my journey there. So thank you so much once again. But my question is this, just because there are a multiplicity of cryptocurrencies, like they are almost innumerable, how do you, as a trader, as a cryptocurrency trader, and as a professional one at that, how do you filter through the innumerable cryptocurrencies to now begin to know the ones to trade, analyze technically,
Okay.
and also get the fundamentals that are attached to the cryptocurrency? Because there's so many of them, and it could pose some level of confusion, frustration. You don't know which one to take, you don't know which one to analyze, you don't know where to look for the news. So how do you go about that?
Okay. Okay. I think let me come in here. Okay, I like this question. Okay. Now we're only talking about the future. We just talked about one of the future parts now. Blockchain, crypto entirely has its own how it works. Apart from how futures works, we have how blockchain entirely works too. Now, most of us that started crypto, I'll use personal experience because I also have good then. Now, when I started crypto, we started because we don't have money. I'm just sharing personal experience and experience I gathered from members in one of my group then. Now we're like, okay, let's start future because let's start crypto trading. I took time to read books, I watch videos and all that. Those things did not really help. That's what you get from a personal experience. Now then I never knew that shitcoin, the same shitcoin we call, these are coins that they're not really project based. There are some of these coins that are coins that once they list them in the market over 2, 3, 5 months, they will dump them, maybe 1 year, those coins will no longer be in existence again. So, but you know that people make money from that shitcoin to start their crypto journey. Now, when I started, I didn't start with any of those shitcoin. I started with Bake. I bought Bake when it was 3 cents. And when it got to $7, I sold it. And I bought it with $30 when I started crypto. Imagine I used $30 to buy a coin and I had about 700 pieces and it got to $7 and I sold it immediately. I made almost 700 something dollar plus more in that, almost $800 because I bought it very, very cheap. Now, that's what I made from crypto now. Then I now entered into what they call, when I was seeing shit coins and all. I'm just giving you my journey towards crypto. Now, when they say, okay, buy, I bought some of those coins, immediately listed them. I even joined some paid groups where I have some ship groups where if a coin is coming in, I see it. I'll be like any new fake, whatever is shit coin, I see those coins, I subscribe, I get those information, and I'll drop it in the group. People will buy into. These are days where we use $5 to make $50, $100, $5 to make $200. Unlike now that everybody's eyes now is open, you can do analysis very, very well before you dive into coin. And now I'm not talking about future now. Now the fundamental part of all these aspects now is every token has what they call a contract address. Okay, under each ecosystem. This blockchain is actually my thing. Now every coin has a contract address on each ecosystem. Like on Binance now, BNB has its own ecosystem. Is an ecosystem on its own, just like Ethereum is on its own. We have Optimism, we have SEO, and these are different ecosystems. And their coin, each coin has its own contract address. So now, what to this? What they call scanner. On BSC, we have BSC scanner. You can take a contract address of any newly listed coin, you go to that scanner, that BSC scanner, then you